This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Apple's still minting more money than God, right?
Geopolitics front and center for global Wall Street.
With Lisa Mateo on markets.
Stocks are coming off of another record high.
And Michael Barr with news.
U.S. Secretary of State discussed the conflict in Gaza.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, John Tucker in for Lisa Mateo. She was at Mel's Diner last night.
She was? Okay.
Sunset Boulevard.
Yep. She's out there on social.
She's
social. In LA.
She was very social, I thought, as well. Yep. Carol Massar and Tim, they're out in Seattle at the Green Report. We're here for CPI this morning. We welcome all of you. It's a busy day all of a sudden. We've got earnings we can talk about. Ed Yardeni with a stunning research note, but CPI 8:30 front and center.
Absolutely, Tom. It's a key inflation gauge for this Federal Reserve. We're looking for moderating inflation. We'll see how that plays out. And as you mentioned, Tom, earnings. Pepsi, a little bit weaker than expected. Sales volumes. I'm buying my Fritos. I don't know what's going on out there. Delta had some good revenue, some good traffic, but costs are a challenge there for that airline.
Yeah, and the nuance of 45 headlines out from Delta to me is okay, and this is like a Helene Becker question.
Yep.
When did they, George Friedman, when did they cut capacity? They build out, as Jess Benton just said to Amy Morris, they build out capacity during the pandemic. I guess it's a teensy-weensy bit slower, not much.
Yeah.
How do you cut back? What flights do you cut back?
That's a tough business to manage. There's so
it
many
is
variables,
brutal.
In that airline business, and it all comes down to the consumer and pricing and fares.
We'll talk about this as we have time this morning. Edward Yardeni, Ari, please get this up on YouTube as well. Ed Yardeni comes out and says, I was wrong. He's now more bullish than he was 2 days ago. He calls it a melt-up. And he's looking now from 5,600 to 5,800 on the Standard & Poor's 500. That's a fractional move up here. But he reaffirms Standard & Poor's 8,000, Paul, end of the decade, which is Dow 56,000. Is anybody framing that? I don't think so.
I'm looking at we're just shy of 40,000 on the Dow, which we hit about a month ago.
Our interns are talking to Ed Yardeni's interns. We'll get them in here at some point. We're on YouTube. Search and subscribe out to Bloomberg Podcast. Please subscribe to Bloomberg Podcasts out there with a live chat. I haven't tuned in. I'll get to it in a moment. Apple CarPlay, Android Auto as well with the Bloomberg Business Flash. John Tucker. He's Lisa Mateo.
Yeah, well, maybe I don't want to be. Traders waiting for the inflation data, of course, at 8:30. For reassurance, the Fed interest rate cuts are on the way. Now, Bloomberg Economics expects the June CPI report to be, quote, really good, to borrow Fed Chair Jerome Powell's characterization of the recent inflation prints. Dow futures right now 57 points lower. That's down about 0.1%. The S&P E-mini futures, they're down 6. That's down 0.1%. NASDAQ futures right now 17 points lower. 2-year yield unchanged, 462. The 10-year right now unchanged. That is at 428. Among the most active in pre-market trading, shares of Pfizer up about 4%. New York-based Pfizer, the company saying it's advanced development of a once-daily weight loss pill. Again, shares of Pfizer up 3.6%. And, of course, companies opening their books. You mentioned Delta. Those shares right now, they are down 9% in pre-market trading. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Paul and Tom.
John, thanks so much. Let's go to economics today. Translated into the markets, Michael Nathanson will join us in the 9 o'clock hour on the entertainment madness. Paul, familiar with that, to say the least. Kate Moore, Randall Kroszner, Booth School, Chicago, the former Fed governor. Claudia Sahm.
Yeah, nice.
It's a real tag team, aren't
Very
we?
good.
To have Claudia Sahm and Randy Kroszner.
Yep.
The interns are killing it.
Exactly.
It's just killing it. Starting strong, Jonathan Pingle, UBS, joins us this morning. Jonathan, what is the new character of our national disinflation?
Well, I mean, what we've got going on right now, we're continuing to see goods inflation disinflate and be a sort of a key reason. Chair Powell has also been worried about many of these other services components, the ex-shelter service, but they've actually been reasonably well behaved. I think the big thing to watch for in today's CPI report is going to be shelter, in particular owner's equivalent rent. that has actually
Right.
been the surprising stall out from progress. over the
Totally
last 6 months.
agree. And it help me here. Is it singularly pandemic, multi-family build out, and then oops, there's too many apartments?
Well, we do have a fair amount of supply coming online over the next year, but I think at the moment we're all actually scratching our heads to figure out what exactly the CPI survey is measuring. You talk to the apartment REITs, or you look at some of the other big data, and it does look like rents have slowed by more than what's showing up in the CPI. So I think we, as well as Chair Powell, are sort of sitting around wondering, like, when does this follow through from what's unfolding in multifamily really show up in the data?
Tom, Jonathan has got a very solid academic background. Started out really well at University of Connecticut. Then he gets his master's from the University of Chicago. But then it goes terribly downhill, Tom. He gets his PhD from the University of North Carolina, Chapel Hill.
It was just
terribly
It was a
downhill.
stumble.
Yeah, I don't know what happened there. He missed my Dukies by just like 10 miles. He missed Duke. Jonathan, 2% target for inflation for the Fed. I'm not sure why it's such a big deal. Help us think about that. I mean, why is the Fed focused on that 2% number?
Well, I think they really just want to anchor expectations somewhere. And they, back in 2012, Chairman Bernanke and the committee thought that, worried about what was unfolding post GFC, and they really thought pinning a number very specifically like 2.0 would help solidify, for the public and for, businesses what the future, sort of future level of inflation should be, and what they should think about incorporating into their decisions. And it was sort of deemed a relatively low and stable rate. But I mean, I think inferring from your question, you're sort of wondering, like, 2.00, do we really need to get there?
Exactly. Which brings me to the question about the consumer, Jonathan. I mean, we kind of saw from Pepsi today some weaker than expected numbers, particularly just on the top line in volumes, maybe people trading down to cheaper off-brand product names. How do you view the consumer out there today?
Well, it's a tale of two consumers. I mean, if you look at the upper 20% of the income distribution, they're absolutely awash in cash, liquid assets, and high levels of equity market wealth. They're also benefiting a lot from, the sticky, elevated home prices in the existing home sales market. But if you look at the bottom 2/3 of the income distribution, they're under substantial pressure. They're paying more of the net interest in the economy. Their delinquency rates are rising. We're seeing, over 10% of credit card accounts paying only minimum balances.
Right.
It does really look like you've got, and it's not really the low end. I mean, it's seeping up through the middle. But I think you've got a tale of two consumers and a big segment under a lot of pressure here.
Jonathan Pingle, unfair question, but I can do it for a gentleman from Chapel Hill. And that is, can you link disinflation and a declining nominal GDP of some persuasion over to a diminished revenue growth in our corporations?
Well, yeah, I mean, this is something that, I think we will probably see show up in earnings, if not this quarter, in the coming quarter. I mean, you are seeing a slowdown in nominal growth. You're seeing pressure on the consumer. I think one of the interesting things for the equity market, however, has been, despite the slowdown we're seeing in the economy and the disinflation underway, there's still several stocks that are really driving quite impressive returns here.
John Pingle, thank you so much. With UBS, Jonathan Pingle, greatly appreciated to get us started again. We'll have a lot more chat, 90 minutes or less away here to the CPI report. The PPI tomorrow, frankly, is just as interesting.
It is.
I didn't say that a year ago.
No.
2 years ago.
So we're looking for, again, PPI, X, food, energy, trade year on year, kind of 2.5% kind of growth is kind of the expectation. A little bit higher than last month.
Yeah. Futures -6. There's a little red on the screen, but I don't want to oversell it to you. Again, to me, the big adjustment here is the inflation-adjusted 10-year yield. The 10-year real yield under 2%, 1.99%. Technically, I need to see 1.95% to get me out of range. We're not there, but we are at the bottom of the recent range of the 10-year real yield. With our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, John. President Joe Biden's re-election campaign continues to face pressure for him to drop out. Bloomberg's Ed Baxter reports.
Opposition as well as top leaders not showing confidence in his candidacy. Chuck Schumer reportedly told party donors in private that he would be open to a ticket without Biden at the top. Axios report. Senator Peter Welch of Vermont has become the first sitting senator to directly endorse a replacement. Former House Speaker Nancy Pelosi stopped short of an endorsement, saying Biden will do what he wants to do, and there should be discussions next week. Outside, well, star fundraiser George Clooney said he had seen the same Biden 2 weeks ago that we all saw in the debate last week. Biden aides meet with senators today. I'm Ed Baxter, Bloomberg Radio.
Meanwhile, President Biden will close out the NATO summit in Washington with a rare solo press conference this afternoon. Last night, during his dinner toast, President Biden touted the alliance and a common belief in dignitary democracy and also for freedom. The dinner honoring the 75th anniversary of the Defense Alliance. The Department of Energy is offering $1.7 billion to car makers and suppliers to help them convert 11 plants to prepare for the move to electric vehicles. The funding would be scattered among 11 facilities considered by the administration to be at risk. It will be used to help convert assembly plants, parts plants, and even plants that make electric school buses. In soccer, Colombia beat Uruguay 1-0 and will face Lionel Messi in Argentina in the Copa America final. Then after the game, players from both teams pushed and shoved on the field at the final whistle, and some Uruguay players went into the stands to scrap with fans. That always works out well. Global news, 24 hours a day, whenever you want it. With Bloomberg News Now, I'm Michael Barr, and this is Bloomberg. Tom, Paul, John.
Michael Barr, thanks so much. We've got to set this up. David Gurr is scheduled. Is Gurr still scheduled to be with us? Did you talk to his people? Is he?
He's got people.
We think he's in the building, maybe?
He is in the building.
Okay.
We've confirmed
or
that.
Starbucks next door. We don't know which.
Exactly.
Gurr, I want to set this up now because David is coming in. And you've got to talk about Biden and all that. Gurr puts out comments from a Bloomberg News published story of Zaslev of Warner Brothers Discovery.
Yep.
This is David Zaslev yesterday. Quote, "We just need an opportunity for deregulation so companies can consolidate and do what we need to do even better." Basically saying he doesn't care which party wins.
No, and that's a terrible comment in my opinion. I mean, we need consolidation to shore up what are bad business models right here. It's silly. I mean, the simple fact is the industry needs to figure out a way to monetize and to make money off of streaming because that's where the world is going. Bigger's better, but he's already made a gajillion acquisitions.
Is this because you have like a Mocha Kai whatever,
exactly.
Chai whatever out in Sun Valley?
I'll tell you, Sun Valley this time of year is spectacular. It's
is
unbelievable.
It really?
Yeah, it's just amazing.
I'm surprised Gurr's not there.
I know. I'm surprised he's not like a fed guest
and
out
rested,
there. Exactly. So it's they get all the media moguls out there. Now it's mostly a lot of tech folks out there these days.
Wait,
it's a great place to be.
I get it. Lisa Mateo from Hollywood up to Sun Valley.
Sun Valley, I can see that.
Taking Clooney's Gulfstream.
Sure, why not? Absolutely.
Why not? David Gurr will be with us here in a bit here on what's going on in Washington on this really, not to mince words, important day for America. Good morning.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom, with his Bloomberg Business Flash. Let's just check the pre-market. Pfizer among the most active shares right now, up over 2%. Pfizer moving forward with a weight loss pill. The drug maker trying to crack the multi-billion-dollar market for obesity medications. This is also a once daily treatment and a pill. Delta shares down close to 10%. The airline expecting profit this quarter to fall short of Wall Street expectations. They blame heavy competition for driving down ticket prices. PepsiCo, that was down about 2%. The Dorito maker reporting weaker than expected revenue growth. They also have blame. They're blaming budget-focused shoppers in part. 8:30, of course, Wall Street time, inflation report, and Bloomberg Economics' Anna Wong expects June CPI to be a really good reading, to kind of paraphrase Jay Powell. Dow futures right now 66 points lower. That's down 0.2%. S&P E-mini futures, they're down 6. The NASDAQ futures about 16 points lower after yesterday's record closes for the NASDAQ and the S&P 500. And yields right now, 2-year unchanged, 4.62. The 10 unchanged also, 4.28. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash Bulletin.
John Tucker, thanks. So, did you realize, Paul, that there's never been a Dorito in the Gura household?
No. Please.
There's never been a bag of
like
double salted Doritos or whatever. Joining us now, the host of The Big Take. Really timely, and every day recently it seems to be about Washington, is David Gura. David, as you know, I was deep into the surveillance nap yesterday, and I woke up, and not to mince words off the cell phone, the Washington world had changed. Review, just for our international audience, what changed in Washington yesterday in the vicinity of 2 p.m.?
Well, a renowned actor and longtime Democratic supporter came out saying that he thinks that Joe Biden should step down or not run for re-election. That's George Clooney. And then we had movement among the Senate as well. Pete Welch, the senator from Vermont, saying essentially the same thing in a Washington Post op-ed. So we've seen, I won't call it a snowball, but an escalation of members of Congress calling on this president to reckon with what's happening here, both in his capacity to hold the job and also in what the polls are saying, and think more seriously about
when Nixon resigned, John Wayne didn't call him up and say resign.
Or write an op-ed for the New York Times.
How did we get to where, full disclosure, I think Mr. Clooney's incredibly gifted, but, when they say he's a celebrity, I don't buy it. He's not like a celebrity type. He's gifted. But how did we get to where Hollywood donors are telling the President of the United States
just
what
as there
to
has
do?
been an erosion, I think, in support in the House and the Senate, we've seen it among the ranks of these big donors as well. And so we saw Rob Reiner coming out. These are people who give a lot of money to the Democratic Party. I mean, George Clooney, in that op-ed, outlining the fact that he was a huge backer of President Biden last time, President Obama the time before that. He has donated hundreds of thousands of dollars to these campaigns. And what he cites is this mega fundraiser that happened just a couple of weeks ago, just before that debate. It was out in California, widely attended, raised a ton of money. And what Clooney says there is that the Biden that he saw on stage at that event was the same Biden that he recognized in that debate as well. And I think there's a format to all of these op-eds, be they by lawmakers or celebrity donors. That is this acknowledgement of the fact that Joe Biden has had a long career in public service. He's done an awful lot. He was this kind of bridge president from Donald Trump to where we are now, acknowledging all of his achievements, but again, remarking on the fact that this isn't going the right way as they see it.
And David, I guess most Democrats would say, I just want the person who has the best chance to beat Donald Trump. Is there any sense within the party who that person may be, whether it be President Biden or someone else?
We have this short list of mostly governors who have been rumored to be likely prospects for this if it were to happen. We had a congressman from South Carolina saying there should be a sort of mini primary that takes place before the Democratic National Convention. We could hear from a number of these folks, be that Gretchen Whitmer or Gavin Newsom. Those are the names that are floated, J.B. Pritzker as well. But no, there isn't one, and I think that's what gives a lot of sort of the establishment pro-Biden supporters pause. What they always say is that he's the one who has beat Donald Trump. They're looking back as they look forward.
It's Thursday. He's going to take a victory lap on NATO. There's going to be a press conference. And with your experience, David Gura, holding court on Sundays at MSNBC, he has to get to the talk shows. How does Joe Biden get to Monday morning off of a press conference and 2 days later the Sunday gauntlet?
This will be a very scrutinized press conference this afternoon, 5:30 p.m. in Washington at the Convention Center. It's something that he scheduled after that disastrous debate. So there's been a lot of build to this, a lot of anticipation. It's a solo press conference. He hasn't done one of those in a long while. He's done fewer press conferences than Ronald Reagan. We'll see what carries over to Sunday, but it's safe to say that immediately after this, it'll be picked apart on cable news, in the newspapers, among those members of the House and Senate, watching very carefully to see any signs of slippage. And then you say Monday morning, a big event is Monday afternoon as well.
Right.
He's sitting down with Lester Holt in Austin, Texas for another one of these primetime interviews, and we'll see how he
When
carries
is that?
it out.
When's the Holt interview?
Monday evening. It's supposed to be 15 minutes in length, no longer.
Paul, Henrietta Trey's yesterday was great.
Perfect.
She said,
Yep.
they have it wrong. The public doesn't want him for another 4 years because of his medical condition. And it's the elites that are behind on this.
Yep.
That's what I don't think has been talked about. I think Trey's was profound yesterday.
Vice President Harris, Kamala Harris, we're not hearing much from her. I guess is her strategy just to sit in the background and see how this plays out?
Seems to be her strategy. I mean, she's not doing interviews, but she is in North Carolina today. She's going to be doing an event in Greensboro. She's on the campaign trail, and so you see her, you see Newsom and Whitmer and others kind of keeping their head down, doing these events, not creating a big stir. Although, you asked Tom about what happened yesterday. Of course, another signal moment was when the former House Speaker Emerita Nancy Pelosi came out on Morning Joe and said basically that Joe Biden needs to make up his mind. And that's seen as kind of her leaving the door open, perhaps encouraging members of the Democratic Party to speak their minds. She's very conscious of the fact that this could have significant effects down ballot on members of the House who are running for re-election. Yeah. So she wants them to be able to kind of speak their mind if they need to.
From where you sit, what does Chicago look like, David Gura?
Yeah.
I mean, at this point, I think that it's a real mess, and it could get a lot messier. So if he goes ahead, remains the candidate, Joe Biden remains the candidate, there will still be those who are skeptical within the Democratic Party, and I think there will be heated tension within that convention in Chicago. Obviously, if he steps aside, anoints a successor, it's a whole new ballgame. There are those who say this is an opportunity for the Democratic Party. You could pick somebody besides Joe Biden that would infuse the party with some excitement, and we could maybe see that carry over in Chicago. But I think regardless, there is going to be this tension. Should it be Biden or somebody else? And that'll be the crucible in which it plays out, Tom.
New York Times, about a week ago, switched its position and really came out and said President Biden should step down. Leading columnist Tom Friedman, for example, has been a longtime supporter of the president, said he should step down. How does that resonate with the Biden camp? Do we know whether they pay that much attention to mainstream media?
We know that President Biden loves Tom Friedman like he likes David Ignatius at the Washington Post. These are people he reads and respects. So no doubt it's wounding to him to see those comments in the New York Times and the Washington Post. But the Biden campaign has been using this very effectively to say, look, these are public pronouncements by elite columnists in a handful of newspapers. Who cares what they have to say?
I'm running out of time. David, you just said it. The Biden campaign. Who's driving the bus?
There are 3 campaign officials who are making their way to Capitol Hill today to sit down with Democratic senators to make their case for his continued candidacy. They are trying to drive the bus here, but I think that we have seen over these last 14 days, it's been 2 weeks since that debate, starts and stops, and one wonders the degree to which President Biden is driving this strategy going forward. Perhaps we'll hear more about that today.
Or his family? I mean, I don't want to get into the gossip.
Or his family, of course. But we know that after that debate, he retreated to Camp David with his family. They, of course, are planning
I mean, Paul, this is like at the Gura household when they
I want Doritos, right?
Should we have Doritos?
Exactly.
Unfortunately, we have too many Doritos. I actually had a bite of one.
He's up on the roof picking his fiddle.
But the kids are holistic. Yeah. But unlike at my house where I had a Dorito, and it's basically a bag of salt with some flour.
Cool Ranch or nacho cheese? What's your preference?
It's like a fiery thing
mix,
or something.
Yeah, go for it.
And it's not the Doritos we remember as kids.
No, it's got a million different flavors, but a little bit of a weakness.
There have been chemical advancements since your
youth. Very good. Chemistry with David Gura. Folks, it's real simple. On the Big Take out on Apple Podcasts, look for David Gura summarizing these historic events we're all living. And again, those events are this Thursday. Balance of Power will give you our best coverage. Joe Matthew and Kaylee Lines. Towards what time is the press conference, David?
5:30 p.m.
5:30 p.m.
Wall Street time.
Wall Street time. Excuse me.
He's learning.
Yeah, we'll get there.
We'll get the Kool-Aid out, and it's not like Doritos.
That's 3:30 Sun Valley time.
Yes.
Very good. David Gura, thank you so much. In 1 hour, the inflation report for the nation. This is Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Treasury rate now, the 2 and 10s pretty much unchanged as we wait for the CPI, 8:30 Wall Street time. Traders want reassurance. Cuts are on the way. Contracts in the S&P 500, NASDAQ 100, little change. Both of them gained more than 1%. Fresh all-time highs yesterday with NVIDIA and Apple leading the way. Fed Chair Powell telling Congress yesterday the central bank doesn't need inflation below 2% before cutting rates. Costco wholesale climbing this morning at more than 3%. They hiked the membership fee for the first time since 2017. PepsiCo slipping, reporting weaker than expected revenue. One of the standouts this morning, QuantumScape. Never heard of it, but it's up 26%. Volkswagen's battery company, PowerCo, and QuantumScape announcing they've entered into an agreement to industrialize QuantumScape's next-generation solid-state lithium metal battery technology. It's a battery story. Dow futures down 78. S&P E-mini futures down 7. Sometimes I need these interpretations. NASDAQ futures right now down 17. But yes, it's a battery story. Batteries are the... Paul told me to read The Grid, the book, and my assessment from that is to stabilize the grid, the future batteries. So whoever nails that is going to get very rich.
And the FT today with a lot of nickel, and there's now a nickel glut off of Indonesia, and nickel is the battery users like Tesla are not using nickel as much as they expected. Right. So it all folds into truly a global scene. John Tucker, thank you so much. This is a joy. FM Investments is the modern way where fee-based people manage money. Alex Morse joins us now, CIO at FM Investments, Washington and Maryland based. Thank you for joining us in our studios. The turmoil right now of 7 stocks driving everything has to be insane for financial advisors. How are you adapting to the new world of the melt-up every day, as Ed Yardeni calls it?
It's hard. I mean, how do you come in when your neighbor says, well, I just bought NVIDIA and I made more money than you professionals? And if we look at clients...
Is there an anger?
Is there an anger? There's a little bit, I'd say, but there's not... It's hard to argue. This is the way the market works, right? We built it this way. It's kind of our fault, right? It's our bed. Now we have to lay in it. There will be a retrenchment at some point. We know it's coming, but the easiest way to lose your job on Wall Street now is to be calling for that 30% correction and have been for the last 2 years.
You say this perfectly. At FM Investments, with all the advisors you have and the way you've built out trillions of assets, literally trillions of assets, you've got to respond to the daily melt-up. What's the strategy to respond to that?
A lot of what I think we try to caution people against is that you can't fight the market. So if momentum is taking you some direction, there's nothing wrong with participating with it for a while. The time to buy insurance for that is either to stay out and to set your expectations accordingly, but not try to time the market, right? It's just not ever going to work. We hold names like NVIDIA, we hold them above risk levels, and it's not because we think that NVIDIA is going to be the biggest company in the world that it should be. We're here to generate positive returns for people as best we can. There will be a moment when there's a 10% correction in that name, and sadly we're going to ride that down too. But that's what you pay for when you come along on the ride. The goal is, over the next decade, can we do that to beat a benchmark?
So how do you think about asset allocation here? Equities, bonds, alternatives? How do you look at that?
We've always been relatively well-balanced. The problem is that just hasn't paid off as much as it should have. We're not deterred from it. We still think folks need to hold on to bonds. We're a big bond trader. We believe there's a lot of action to be had there, a lot of great capabilities. But it's tough some days when you look at the equity markets yesterday. Everything was green on the expectation that CPI is still above what expectation should be 2 years from now.
Well, to clarify now, Paul, continue, but to clarify, Wednesday was not like Tuesday or Monday. There was a pop to yesterday that wasn't there earlier in the week.
So let's just stay with the equity markets here. Are you kind of equal weight those big names, or Are you trying to find some value outside of the big 6, 7, 8, 9 names?
So we've been trying to find value, and we have. I mean, don't get me wrong. If you just bought the index, 16% midway through the year, it's not a bad year. I mean, historically, 12% is what you're supposed to get over the course of the whole year. So we've got a little room for things to back up, and it's still pretty average.
Yep.
It's just hard to find substantial value. You could find some names that have done pretty well, but you can look at a Home Depot, you can look at some Costco, things like that. But if the headline story is always going to be 30, 40%, I'm doubling my money every 6, 8 months. That's just hard to beat for people.
On the fixed income side, I mean, again, we finally, for the first time in 15 years, have yield out there. I mean, a 2-year Treasury, 4.6, 4.7%. Do I just stick my money there? That's no crime there, or do I try to take some credit risk?
No crime at all. I mean, certainly if you want just the easiest yield, sit in T-bills. We run TBIL, T-bill and chill has been what we're saying, and
T-bill and chill.
Still 5.3%. It's hard to argue for rolling a 90-day, T-bill.
That's what a good buddy of mine who was a significantly big time hedge fund trader. He's my ski buddy. We're sitting on the chairlift, and he's like, "I'm just rolling 2-month, 3-month T-bills." He's been doing it for a couple years. I'm like, wait a minute.
Can I buy T-bills from Treasury Direct, or I have to go through you?
You can try. We encourage people to do that. It's a website built in, I think, 1997 and hasn't much changed since then, right? It replaced a phone system, and prior to that, the post office.
Yep.
So it works. You can.
I can see John Tucker down in the
mailing it.
Do I need a broker to do that?
No. If you're ever in Washington, the cash room of the Treasury is a really beautiful room. It wasn't used for that long. This goes back to President Grant. I remember it clearly. But I can see John Tucker lined up at the gorgeous window of the cash room. Could I have $1,000 or $1,200 of those Treasury bills? Tell me about the ETF revolution. You guys are in the heart of this. Fees are coming down. ETFs have way lower fees than the alternative. Is it an ETF future for America?
I think so. I think it's a good thing, right? But I think folks miss the boat. They think ETF, they hear low fee, and they hear no taxes. And those are some nice features, but the really cool thing about ETFs, and 2 years ago, we didn't have any. We couldn't spell ETF. We sort of embarrassingly misspelled it on a few things from time to time. But it's that we learned they're a team sport, right? All of us in the money management business, we're all actively trying to buy and sell the same things. But we ultimately need brokers or all these parts of the capital markets infrastructure. ETFs put us all on the same side of the trade. So some of our products, we get better execution, better pricing than we could deliver to our institutional clients by far, where usually it would be the larger clients who would say, I don't want ETFs, I want you to do all the work for me. They're the first to come to us now to say, stop doing all that work.
Right.
It's adding friction. Do it the easy way.
What's the number one mistake mom and pop are making right now? High net worth, they come into FM, one of your advisor franchises. What's the number one mistake people are making?
I think most folks are trying to run for the hills, right? They're too afraid of
cash?
Well, cash is okay as long as you're invested.
No, but is that what they want? They're comfortable in cash or T-bills or whatever?
I think they're looking for private credit. They're looking for things they don't need to do. They're happy to give up liquidity, which seems the absolute worst time to be doing that, for what they think are more sustainable They look at returns today and say, that's going to go away next year. They've been saying that for 2-3 years. They've been wrong. Locking your money up for 5-10 years on things that are overvalued, right? You should take a look at BREIT versus the NAREIT index, and you realize that it's not because the NAVs are wrong. It's because someone's setting one of those NAVs and the market's setting the other. And they're willing to give up cash today.
I got to make some news here. Are you predicting, and you've got alternative experience, Paul's been on this big time, but in private credit and particularly in private equity, is it going to be a long workout to get some form of liquidity valuation that's reasonable?
I think it's going to be a long workout, and I think it's going to end in tears for some folks who realize the numbers they've been seeing on statements for the last 2, 3, 4, 5 years aren't really there.
Okay. One final question, really important. Where you're located, Orioles or Nationals?
Nationals.
Oh.
I'm a trade in though to DC.
This is an Orioles studio. The Nationals.
Yeah, we have a vested interest in Orioles.
We have a big vested interest.
Yes.
We're very Orioles. Alex, thank you so much with FM Investments in the vicinity of Washington. Alex Morris, the CIO, FM Investments. Thank God he didn't say the Tigers. With our news in New York City, Michael Barr.
Oh, my. President Joe Biden's re-election campaign continues to face pressure from him to drop out. Celebrity donor George Clooney said he should not run, and Democratic senators expressed fresh fear about his ability to beat Republican Donald Trump. Democratic Senator Richard Blumenthal of Connecticut says whatever happens, Democrats need to be united behind the decision.
There are advisors and supporters who may give him the kind of guidance that he is looking for, but I think ultimately it's his decision to make.
Meanwhile, President Biden will close out the NATO summit in Washington with a rare solo press conference. Last night, during his dinner toast, President Biden touted the alliance and a common belief in dignity, democracy, and freedom.
To NATO and to our neighborhood of nations, may we continue to grow stronger and closer in all the years ahead.
Prosecutors sought to cast Alec Baldwin as someone who flouts rules and has little regard for safety at the first day of his New Mexico trial in the shooting of a cinematographer on the set of Rust. Baldwin's attorney told jurors that the actor did only what actors always do, act like the characters they're playing. He called the death an unspeakable tragedy, but said Baldwin had committed no crime. Activists delivered a petition with more than 55,000 signatures to members of Congress demanding legislation that would allow workers nationwide to take paid time off for family or for medical reasons. The petition, organized by advocacy groups Paid Leave for All and Moms Rising, aims to create a permanent national paid leave program. Dawn Hucklebridge is the director of Paid Leave for All.
We are one of only 7 countries in the world that doesn't guarantee any form of paid leave federally for its people, which means we are not just losing to other wealthy countries, we're losing to nearly everybody.
Critics say paid leave requirements would force businesses to raise prices to pay for these benefits, likely passing on the extra costs to consumers. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg Tom Paul John.
Yeah, Michael Barr, thanks so much. Ian Lingan just memos here moments ago from BMO Capital Markets, a hyper-detailed, lengthy note on CPI coming up. I'm not going to go into it because it'll take an hour to get through Lingan's brilliance. We're reminded that the departure point matters, and in the wake of last week's payroll update, yields are near the bottom of the range. And then it goes on. From there. In the equity markets, Ed Yardeni with a note overnight, he said, I was wrong.
Okay.
You love it when Yardeni says he's wrong.
That, yeah.
You lean forward, the giant of CJ Lawrence. He says, I was not optimistic enough. 5,600 to 5,800.
Okay.
And he's out with a 6 near 7% return for the next decade. Do you remember, Paul, in our Ute, when Wall Street firms actually looked out 3 years?
Yeah, you give it a
routinely.
shot. Give it a shot.
Routinely. Everybody looked at 3 years. And I'll say with the great financial crisis, that went by the wayside.
Yeah.
They don't want to look out 3 weeks.
No, of course not. It's tough out there. But, I mean, it seems like the strategists on Wall Street are just trying to play catch up here to what's happening in this market here. Again, S&P 500 up 15, 16% this year. We see it across the street, strategists raising their targets here. We're going to go
chasing,
following. And the next data point is earnings. We're starting to kick them out now. We got a couple of week numbers out today from Delta and Pepsi. But again, the big banks tomorrow. But earnings will be front and center as well as the Fed.
The timeline on this for me, folks, and this is, I'm not mentioning names I should be mentioning, but Ben Laidler at HSBC, Christmas of 2018, just said, shut up and buy.
Mm-hmm.
And then October 2 years ago, which I call the Yardeni Ankampora bottom, Ralph Ankampora, the great chartist, at Yardeni. And there were others that said in October, November of 2022, get on board. And then what I didn't expect is it reaffirmed in October of 2023.
Yeah, and boy, off of that bottom, we're up well over 30% off that October 23 low. So.
Well, the purview of this from the triple leveraged all cash fund is just killing it. And like Alex said, Paul, if you're not in this, you're going, what am I doing?
Yeah, it's tough. Yeah, tough for these managers that aren't long these big tech names.
It's going to be interesting. The VIX, 12.57. Bloomberg Surveillance. Good morning.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Waiting for the CPI. Bloomberg Economics says the June CPI report this morning looks to be another very good report. Should boost the Fed's confidence about the inflation trajectory. Among some of the individual shares on the move this morning in pre-market trading, Pfizer, that was up close to 2%, moving forward with a new weight loss pill. Royal Bank of Canada shuffling its leadership ranks. They're breaking its biggest division into two. This is one of the biggest reorganizations of Dave McKay's decade-long tenure as CEO of RBC. Conagra, they make Bird's Eye, Slim Jims, Ready Whip, Classic Pickle, forecasting adjusted earnings per share. Guidance missing the average analyst estimate. They blame inflation. And after a record close, S&P futures right now 8 points lower. Dow futures down to 81. The NASDAQ futures right now 16 points lower. And yields unchanged. 2-year 462, the 10 at 428. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Paul, Tom.
John Tucker, thanks so much. Paul, this came up yesterday. Somebody said, you know, the sharks on Cape Cod are like real. And then, of course, down south, they're real. What about New Jersey?
Lots of dolphins. Dolphins are
lots of dolphins.
Yep.
We also have I haven't seen any right whales, which are pretty rare, but I see lots of the bigger whales.
Do you not see the sharks because they're little sharks? I mean, I don't know.
No, I see the surf, as a lot of people fishing, surf casting, they're always catching the small. I don't even, they're not dogfish, but they're smaller sharks.
Okay. Yeah.
Do they grow into big sharks?
Yes, exactly.
But you're not sitting there with a beverage in your hand, you know, Budweiser.
No.
Looking out, and the lifeguard's got the binoculars out looking for
they don't
fins.
do that in Jersey. They don't come. It's too tough. They're not coming to Jersey waters. They know it's.
Okay.
These folks are tough in Jersey.
It's your shark update, folks. It's summer.
Now, a look at the front pages. What's making news around the world? Your daily roundup of today's headlines from major publications.
Lisa Mateo, move aside. It's the front pages. Thank you, Interactive Brokers. And with us, John Tucker. It was brilliant yesterday, John. Do it again.
Yeah, let's see if we can top that performance. From the Washington Post, NATO leaders move to Trump-proof the alliance at their meeting in Washington. Former President Trump, well, he doesn't have a seat at the table as NATO leaders gathered this week in Washington. He might as well. Officials are strategizing about how to adapt the alliance for the possibility that its most senior leader may soon again be a skeptic. The alliance policymakers, for instance, have moved control of major elements of military aid to Ukraine away from U.S. command to the NATO umbrella. They appointed a new NATO Secretary General who's he's got a reputation as being especially agile with Trump's unpredictable impulses toward NATO. They're also signing decade-long defense pledges with Ukraine to try to buffer military aid to Kyiv from the ups and downs of politics. They're pushing up also their defense spending. That would be
that's the point. I mean,
that's the
I'm not
single
briefed
biggest
on this,
anger
but
point.
the former president's complaints actually worked, right?
Yeah.
I mean, just to state, like as John just said, they're contributing more.
Yeah, a certain percentage of their GDP.
I think Canada's behind, I'm guessing. I don't have it in front of me. But
yeah, it's all right.
But
that's good news.
He complained, and they upped it. Right, John? That's the report?
Essentially. But in NATO's they're preparing for the possibility that Trump's going to become president again.
Next,
so
what do you got?
They're battening down the hatches. This is from the New York Post. I had to live through this period, and it was crazy. Donald Trump's ex-wife speaking up. According to the Post, Marla Maples revealed in a rare interview she's willing to help the former president's 2024 campaign, and she is even open to being his vice president. I'm ready, she says. I'm available if needed. I'm not sitting back anymore. Maples just turned 60. She actually was talking to the Evening Standard in her first interview in 8 years. The Post picked it up. She says, I want to step out more, share more, and not be afraid of positive or negative outcomes that come from speaking out. They share her daughter, Tiffany Trump. The former couple's relationship had a controversial start since they met during a charity event in 1985. And God help me, I was actually there. The real estate mogul was still married at that time to Ivana Trump.
All right.
Remember the fireworks.
Okay. What else do you have?
This is more back to reality. The Wall Street Journal, American workers have quitting their jobs, at least for now anyway. Numerous surveys show that fewer U.S. adults are currently seeking to leave their roles compared with job-switching frenzy over the pandemic years. Other data suggests job satisfaction is rising, and in interviews they conducted, formerly job-hopping workers say they are now content with the balance that they've struck in the positions they have. Federal data show that those who are tempted to make a jump face, of course, a tightening job market and shrinking pay premium for switching jobs. So changing jobs.
I get it back and forth and all that, but I'm way more interested in the dynamic between full-time and part-time jobs.
Yeah.
And that's clearly gone, John, to your point, to more part-time job up versus full-time job up.
Well, that also might be a conscious decision by people who just, don't want to do it anymore. Yeah. Let's finish with this one. This is actually an interesting story from Bloomberg Business Week. Starting a rival to the Olympics. This is the biotech entrepreneur Christian Angermeyer. I think he's based in London, actually. He has a new venture. It's called the Enhanced Games, an alternative to the Olympics, in which athletes will compete in 10 events, from sprinting to weightlifting to an as-yet undecided combat sport. Except, unlike the Olympics, these athletes will be proudly taking growth hormones, anabolic steroids, and other performance-enhancing drugs. No date or site has been determined for the competition yet. Initial funding was unveiled earlier this year, so they've drawn close to $10 million in capital from Angermeyer's friend Peter Thiel and other investors. Why does this not surprise me? They also have critics. Kieran Perkins is an ex-Olympian who's now head of Australia's Sport Commission. He says simply of this whole venture, quote, somebody's going to die.
Oh, great.
So doped up athletes can win $1 million prize for breaking world records. They're going to be paid also based on criteria, including the success of their social media posts about the games.
Yeah, that sounds like a good
the games, to me, I'm fascinated if there's interest in the Paris games. I just don't know.
I think it's
I don't have an opinion.
Well, we did have a story earlier on the Bloomberg in which the flights, if you're tracking flights from the U.S., more people are interested in seeing Taylor Swift's concerts than they were
the Olympics.
Have we jumped the shark on it? I don't know. I don't want to be negative, and I make jokes about swimming in the river.
But I can just imagine the opening ceremonies are going to be just spectacular.
One of the coolest venues for these Olympics will be out at the Palace of Versailles. I think they're doing the dressage, some of the
dressage there.
Okay.
Yeah, we have team coverage.
Katie Greifeld. Yep.
Will be there. She's taking Gus. And yes,
she's competing, or she's just.
I don't know if she's competing or not, but I do know that Gus will swim the river Seine.
Exactly.
They're taking Gus, and that's how he gets out to Versailles.
Gus is the horse.
He takes the Seine and then turns left out. I don't know, wherever I'm.
Another place I'm not going.
As well. Yeah. John Tucker, thank you so much. The newspapers this morning with John Tucker. Futures -8. We're getting to 30 minutes away from the CPI report. It's actually a big deal, but this is way different than 30 days ago, Paul, because there's huge certitude that we will see disinflation.
Yeah, it's interesting, and I think the Fed is obviously going to be looking at this closely because they're trying to get that inflation down. We heard from Fed Chairman Jay Powell over the last 2 days testifying in front of Congress. Feels like the labor market is softening to the point where he may have an impact on their decision. And now we'll just see about the prices, price stability and employment.
In 2 seconds ago, Stephen Trent, Citigroup, we would treat share price dips in Delta as buying opportunities.
Sure.
That's buy the dip.
Yep.
Is what we call that.
Yep. No problem there. I mean, again, the top line was solid. The business travel is up double digits for Delta. So the top line of the business is good. They just got a lot of cost issues running throughout the business.
There was a soccer game yesterday. England, Netherlands.
How about that?
The Killers are playing in London. And right as England wins, they put the game up behind them and play Mr. Brightside. Very cool. They timed it, I guess, perfectly. Yeah. The Killers.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Why are we upset if we're creating jobs?
Inflation's still a thing out there for the everyday consumer.
With Lisa Mateo on markets.
The economic calendar jam-packed today.
And Michael Barr with news.
Tensions between the U.S. and China have heated up even more.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Paul Sweeney, Tom Keene, John Tucker in for Lisa Mateo. Michael Barr has darkened the door this morning with a huge news day, particularly in Washington. In 29 minutes, a report on the nation and CPI. Ben Emmons publishes moments ago at FedWatch Advisors. Let me quote directly. For markets, the downside surprise is pivotal. Yep. Pivotal, I should say. Yeah. I can't talk, excuse me. Pivotal. There it is. And the answer is that's in the price.
Yeah, we'll see. Exactly right here, Tom. I mean, 8:30, we're going to have it for you, CPI. The headline is CPI ex food and energy, Tom, on a month-to-month basis, 0.2%. I like it on an annualized basis. That makes more sense to me.
Thank you. Do you look but McKee's telling me look month over month.
I know.
I'm looking year over year.
Exactly.
I'm old school.
Because I like to talk about it. If somebody comes up to you at a cocktail party and asks about inflation, you're not going 0.2% month to month, are you? You're talking 3%.
No, I'm talking eggs at Whole Foods is what I'm talking. What I would say, though, seriously, folks, is on the year-over-year CPI, if we get a two-handle, 2.9%, that's psychologically a big deal. We'll see that in 28 minutes here as well. We are out on YouTube. I want to talk about this right now. You go to Bloomberg Podcast, go to Google, search YouTube, Bloomberg Podcasts. And please sign up for Bloomberg Podcasts. It's the heart and soul of what we're doing here right now. Nice growth there in the last number of months. And, of course, the live chat is very live. People talking right now about our military, our Navy, I should say, in the Pacific. Smart Chat out on the live chat on YouTube. On Android Auto and Apple CarPlay as well. Got a great set of guests. Michael Dart is scheduled to be with us. Michael Nathanson on the train wreck known as entertainment here in the 9 o'clock hour. Futures at -8 from the Interactive Broker Studios of Bloomberg Business Flash, John Tucker.
All right, Paul and Tom, futures right now slightly lower. I'm going to call it mostly unchanged as we wait for 8:30. The inflation report. S&P 500, the NASDAQ, that closed at records in yesterday's trading. Likes of NVIDIA and Apple leading the way. Companies opening their books this morning. Let's start out with Delta Airlines expecting profit this quarter falls short of estimates. Heavy competition driving ticket prices down, they say. Delta right now down close to 9% in pre-market trading. And then you have PepsiCo reporting weaker than expected sales growth. The maker of Doritos and Mountain Dew blaming persistent inflation hurting volumes in North America. News about Pfizer, New York-based Pfizer. They are on the move. Company says its advanced development of a once-daily weight loss pill. Those shares are up this morning 2.3%. I wanted to do this story because I think it's important because I keep getting almost every other month a notice from some law firm about a big class action lawsuit against one of the healthcare providers because my information has been leaked out there.
And that's valuable information, knowing John Tucker's.
Yeah, well, online trackers remain on the websites of the nation's largest healthcare companies. This is another aspect to this, often unknown to the patients. Websites operated by 9 of the 10 largest publicly traded health insurance, hospital, and lab companies had advertising and analytics trackers installed on user registration or login pages. This according to an analysis that was done by Bloomberg. So another aspect of this whole online thing. Dow futures right now down 74. S&P futures 8 points lower. And that's your Bloomberg Business Flash.
John Tucker, thanks so much. CPI here in 26 minutes. We start strong with Gennady Goldberg, head of US Rate Strategy, TD Securities. I'm going to go to the 10-year real yield. It's been range bound since time began, since George Clooney's last movie. And the answer is I looked this morning and I had a 199, almost a 198 on the 10-year yield for a cup of coffee, a cup of Sanka this morning. Are we going to see ranges broken here in 25 minutes?
I think we're probably going to see it continue to drift down. I don't know if you would consider it a broken range. I think we're heading down.
My technical's a 195 and I can't get there. I just don't see enough movement.
I think we'll get there over the next couple of months. We're probably not going to get there after CPI. You know, as you guys were talking about earlier, everyone's expecting a weak number at this point.
Yeah.
That frightens me a little bit because when everybody's on the same page, you can get the upside surprise actually surprising everybody a little bit more than it otherwise should.
All right, so when you talk to your clients at TD Securities, how are they positioning themselves for not just today, but for the next several weeks, maybe for the remainder of this year? What are they doing?
Pretty cautiously, to be honest. I mean, I think everyone's been burned over the last couple of years. Everyone's been trying to, trade these kind of higher rates. Everyone's been trying to buy the dip, so, rates lower. And it's gotten a lot of people burned, unfortunately. So everyone's waiting and watching, making sure that the Fed is actually starting to move rates lower before they're coming in.
Do you feel like the Fed is already behind the curve here, that they should have, in fact, been lowering rates already?
Ooh, I don't think so. I think they need the confirmation. I think that's the issue. I think today is only one out of, let's say, 3 inflation prints that they need to go in September. September is more than 70% price at this point. I think it goes up if today's number is lower, and then we actually continue to go.
So I'm looking at the WIRP function. Somebody somewhere back in time, Bloomberg created this WIRP function, world interest rate probability. And again,
what function is it? How do you type it?
WIRP.
Oh yeah, I remember
That's a big one. But
yeah.
I don't know. I've kind of lost.
It's way too complicated.
I don't know what's going on there. But again, we started the year at 6 rate cuts coming in. We got down to 1 or 2 here. What did the market kind of get wrong, do you think, in hindsight here?
I think in hindsight, nobody saw that giant spike in inflation that came early in the year. Right. That first quarter inflation print. Now we're still figuring out: was it seasonals? Was it some other factors? At the end of the day, we don't move in linear trends. But the trend recently has been lower, and that's the important thing.
I'm in the camp. It's European. It's a one-off, almost contractual lift in inflation because 12/31 happens, and a lot of people, auto insurance, whatever, put their rates up. Do you buy that story or not?
I think there's a lot of year-end price changes. Q1 is a huge quarter for that as well. Maybe the seasonals aren't taking a good accounting of that. I think what we're seeing in the last couple of months, though, is important, right? We're seeing a lot of key categories, OER and rents, insurance prices, really starting to actually slow down, and I think that's the key part.
Can I ask a Bramo question?
Sure.
In honor of Lisa
high level.
Bramo. High level. I mean, I'm going to try here and get it right. Ian Lingen over at BMO Capital Markets is talking up. There's an auction after this. 30-year auction, whatever, I don't know. Do the auctions matter now? Do they assist you in seeing where the vector's going?
I think, from a liquidity standpoint, these are really used by market participants to get in because liquidity right now is suffering. From a signaling standpoint, it's a little bit tough because a lot of folks use these for liquidity. I do think that a poor auction here could certainly get markets moving. We're keen to see how much dealers take down. What's the usage of dealer balance sheet? How much is actual demand? We've got $2 trillion deficits in the pipeline as far as the eye can see, no matter who wins in the fall, right? That's the big problem here. So we are looking at those as kind of canaries in the coal mine. So far, they've been okay, but that doesn't mean they're going to be okay going forward.
Why is liquidity down? Is it the TD Securities of the world not making markets in these things? What's going on?
Well, I wouldn't say that. I think all the banks are trying to make markets as best they can. The problem is the amount of balance sheet available versus the deficits and the amount of outstanding debt. The amount of outstanding debt has gone up trillions in the last couple of years. The amount of balance sheet, right? The amount of primary dealers hasn't gone up. The amount of balance sheet devoted to this product hasn't gone up. So we're reliant more and more and more on the end buyers of fixed income securities to be present at these auctions. So if dealers end up with, let's say, 50% of the auction, that's bad, right? That's got to be redistributed to somebody who can warehouse that for a long, long time.
Oh, so that's what we should look at. That's one of the data points when we look at these auctions. Because I have no idea why these auctions are important. So I just looked at people like you or Ira Jersey at Bloomberg Intelligence.
I don't get it. Bramo and I she clawed my eyes out once on this.
Yeah.
She thinks it's a big deal.
I know.
I'm like, yeah.
I'll leave it to Lisa. What else should we be looking out for when we see this inflation prints today, tomorrow with the PPI? What are you going to be looking for?
I'm going to be looking for what it means for PCE, right?
Okay.
And if this translates into a softer PCE, specifically on a 3-month annualized basis, right? If you look at where the Fed really pivoted dovishly back in December, it was when 3-month annualized core personal consumption expenditure, PCE, was actually really plummeting. It looked like it was falling off a cliff. Right there, they pivoted dovishly. And then, of course, we had that Q1 acceleration. It caught everybody flat-footed. We've been decelerating more and more and more. Now, if our forecast for 0.18 pre-rounding is actually correct, then we should be seeing a further deceleration in that trend, and that's good news for the Fed.
Okay, Gennady, thank you so much. Gennady Goldberg with us with TD Securities as well. Running green on the screen, small cap, giving me some green love with our news in New York City. Michael Barr.
Thank you very much, Tom, Paul, John. President Joe Biden is facing the prospect of more Democrats pulling their support for his reelection bid. Vermont's Peter Welch is now the first Democratic senator to call for Biden to step away from the race. On the other side of the Capitol, Earl Blumenauer of Oregon is now the 9th House Democrat urging Biden to drop out. Meanwhile, President Biden managed to reassure NATO leaders about his fitness for office with a strong speech at the opening of the alliance's 75th anniversary. But was it enough to quiet growing doubts about his chances of winning November's U.S. election? Bloomberg government reporter Jack Fitzpatrick.
The NATO summit was an interesting opportunity to look at how people see the repercussions of this uncertainty. There were some good reviews of the president's speech at NATO, so that may have helped him. But at the same time, there are a number of foreign officials, NATO, EU, and otherwise, looking to meet with Trump.
Bloomberg government reporter Jack Fitzpatrick. Biden will give a solo news conference this afternoon to wrap up the NATO summit in Washington. Testimony resumes today in Alec Baldwin's involuntary manslaughter trial. Baldwin is charged in the death of cinematographer Helena Hutchins, who was killed during a rehearsal on the set of Rust when prosecutors say Baldwin fired a prop gun loaded with live ammunition. Prosecutor Erlinda Johnson questioned crime scene technician Marissa Popple, who was part of the investigation into the shooting and found live bullets at the movie set.
How many rounds altogether did you discover that you thought were suspected live rounds on the set of Rust?
5 and the spent casing, so 6 in total.
Baldwin's lawyer calling the deadly shooting a tragic accident, but arguing that Baldwin did not commit a crime, saying the actor never pulled the trigger. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, John.
Michael Barr, thanks so much. Greifeld emails in. Thank you for listening, Katie Greifeld. Of course, 9 a.m. She's, I think, with her team now. They're deep in meetings for the 9 a.m. television show.
Oh, I know. Yeah,
openings
exactly.
and all that.
Yep.
I didn't know this. The horses fly on airplanes.
No.
It's not like a movie.
Well, how did you
where
think they got there?
On
I don't
ship or something.
I don't know.
You put on a
And they have special containers. Emirates Airways, with all their horses leads with this. And you can fly with them.
No.
And you can get level. They get carrots. Yeah. And they get a movie.
Oh my
and
goodness.
I didn't know this. There's people. It's like a normal flight with people, grooms, and all that to help them out.
And vets.
And vets and all
with
that.
shots in case the horses get nutty on the plane.
Yeah, but they be optimistic here. Come on, it's Gus. And the answer is Gus flies, in style.
Yeah.
He goes into
All right.
CDG.
Well, they're Olympic athletes.
Gets out.
Yep.
They watch National Velvet.
Right, exactly.
There's like one movie all day.
Loop it
Katie
through.
Greifeld with Gus at the Olympics. Well, she's got team coverage here. We'll
Yeah,
have that
exactly.
out near Versailles as well. This is exciting. We're 12 minutes away. I'm going to steal your thunder here, Paul. Stephanie Roth with us. It's going to be great.
Yep.
I mean, she has an opinion.
Wolf Research is one of the
steal
great
people.
success
It is,
stories
yes.
on Wall Street. You get these guys after the great financial crisis, they left Wall Street for a variety of reasons, set up their own shop. 99% of them did not make it. Wolf Research made it. Ed Wolf
And
has
prospered.
created an
Yeah.
amazing business there.
Yeah.
It's really cool.
We're a little red on the screen here off of Pepsi Delta in earnings as well. The VIX 12.97 from New York. Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash as we wait for 8:30 and the inflation data. Futures right now kind of unchanged. S&P E-mini futures 9 points lower. That's down about 0.1% after yesterday's rise of 1% at a new record high. NASDAQ futures right now 22 points lower. The Dow futures, they are down 77. Yields right now, the more policy reactive 2-year yield is up 2 basis points. Right now at 464, the 10-year unchanged. That is at 429. PepsiCo reporting weaker than expected sales growth. Maker of Doritos, Mountain Dew says persistent inflation hurt the volumes in North America. And I actually want to do this one because I haven't seen these, I don't know, in how many years, but they still have those red kiosks for DVD rentals in the supermarkets. But now, it looks like the end, bankrupt owner of Redbox Entertainment going to be liquidated. Lawyers for the company and lenders accused its former CEO of mismanaging the business. You think? So goodbye to those DVD rentals.
There is someone in the Bloomberg Television world today, and I will not throw that person under the bus, that up until recently had DVDs. Mailing them back and forth in those little envelopes in the Bloomberg mailroom. I mean, up until 6 months ago. Up until about 6 months ago.
Yeah, Redbox, those things, but that's...
No, this was the Netflix. They were still doing Netflix DVDs.
But Netflix doesn't do that anymore.
They don't, right. So up until recently, they did, though. And on air, this person is as we speak. I'm just laying it out there. I will not name names.
Paul Sweeney, John Tucker, thank you so much. We're 12 minutes away from this inflation report, and we have an important brief. Stephanie Roth joining us right now from Wolf Research. We are commercial free here through the inflation report into the later part of the hour. Thank you so much for joining. I want to go to your physics into your mathematics at Bucknell ages ago.
Does that?
You were 17 years old or whatever, and you had to figure out what a vector was in the Cartesian space. What does the disinflation vector look like right now? What's its character?
Right now, we're seeing this disinflation trend. I mean, I have to say it's probably going to be less disinflationary than what we saw last month. There was a couple of one-off things.
So will this be a disappointment?
No, I don't think it should be a disappointment. I think expectations are set for this. Last month, there was a significant surprise for some areas like motor vehicle insurance, which came in significantly softer than expected. So on the services side, you might see a little bit of a bounce back, but it should look like a core CPI that rounds to 0.2%, which would then put core PCE something below 0.19%, which is what they're looking for to be able to cut in September.
Okay, so this CPI goes into the core PCE. I'm getting all these nomenclatures here. But that's what the Fed really focuses on, right?
Exactly. So core CPI is what comes out first, right? So that's why the market's completely focused on it. But core PCE is what matters when you're really thinking about the Fed's numbers and their projections and what they're going to be officially targeting, which is an inflation rate of averaging about 2%.
So September rate cut totally on the table now, right?
Totally on the table. And I have to say the softness that we've seen recently in the employment data make it even more likely.
Okay.
The core CPI data, is it confirmed by the 47 other inflation series that each and individual Fed has? The Dallas Trim mean, the 3 means at Atlanta, the 2 means at Cleveland, et cetera. Are those others corroborating a disinflation?
Yeah, they're all consistently showing the disinflation. And what I have to say is that at the beginning of the year, it just really, truly looked seasonal. And they didn't want to lean on it for good reason.
Okay,
because they have been wrong.
It's not the beginning of the year. It's July. Did he allude in his testimony the other day that it's July and he can move on?
Yeah, I think that's totally fair. And now we've certainly passed that. The last couple of prints have been good. And now the focus might be on employment because inflation is consistent with the disinflationary trends that we're all looking for.
Talk to us about this labor market. I know it's softening, but is it still strong, full employment, more or less?
Yeah, I would say it's softening, but it's not weak, right?
Okay.
Like that's what we saw in the latest print. I mean, the headline number was a big one. You did get downward revisions. You're starting to see the rise in the unemployment rate, but some of that's driven by supply, and an increase in supply is driving some of that unemployment. Partially immigration, partially people being drawn into the labor force. The new entrance into the labor market has been driving a lot of that. So it's not necessarily such a bad thing, but it's certainly putting some additional downward pressure on the labor market, which is helping to bring down wage inflation.
GDP, where are we in GDP and this year versus maybe next year?
So we're looking for something like trend-like growth, something around 2% for GDP. There was a risk that it could have been above trend. I think that's what the markets were worried about in the beginning part of the year.
Okay.
And that doesn't appear to be the case, which is kind of a good thing because the economy needs to rebalance. Next year should also be something like trend-like growth, something around 2%. I'm worried in 2026, if we end up getting tariffs, that could be a significant downward pressure on GDP.
Talk about real estate in a general sense, because we know here it's absolutely insane. And yet for huge swaths of the MSA America, there are MSAs where there seems to be rents are really declining. Do you buy it?
Yeah, and that's what the real-time data are showing, and that's what we might actually see.
Will
in
that
today's
be in
print.
the data here in 9 minutes?
I think this is going to be the first print where owner's equivalent rent (OER) should actually see a step down. So this has been long awaited. Everyone's been watching for OER to finally come back down, and this could probably be the month for two reasons. One, the seasonals go the other way, so it should put some downward pressure. And then there were some funky things with the metro areas in the prior print, and that should also reverse. So this might actually be the first month where we see owner's equivalent rent take another leg back down.
How about the U.S. consumer here? I mean, we look at inflation moderating. Most consumers have a job. Wages are increasing. Talk to us about the U.S. consumer. Is it two different kind of consumers out there? How do you think about it?
You're definitely seeing some vulnerabilities at the lower end. That's been the case for quite some time. At the upper end, it still seems to be okay. Like you said, as long as people are employed, the consumer should be okay. You have seen a deceleration from a goods perspective. My base case is that when the Fed is able to cut interest rates, those durable goods type categories, the ones that are most interest rate sensitive, should be able to recover to some extent. But it has been a soft patch for the consumer, and I think that started to spook some folks, and one reason why the Fed is more likely to cut in September.
One final question as well on the cutting in September. Is that in the market? I mean, with the melt up that we're seeing, Ed Yardeni goes to 5,800 SPX today, hugely optimistic out 4 or 5 years. So is the Fed action to come in the stock market now?
Yes, I think that's in the market. The one thing that's maybe not yet priced
Please.
is the fact that the market's likely to price in 3 cuts rather than 1 cut. If we're gonna see the market move in a certain direction, it's more likely to price in more cuts. Even though base case for me is still 2 cuts, it's possible we'll just move a little bit in that direction before swinging back.
Hugely valuable. Thank you so much. Stephanie Roth, thank you so much with Wolf Research. Governor Kroszner will join us here in a bit in about 10, 12 minutes. Randall Kroszner of the Booth School, Chicago. But now we go to Michigan academics, and it can only be Claudia Sahm joins us right now, of course, with all of her work, and it's on the real economy, and I'm not going to ask her about the Sahm report and that. I'm going to ask her, and this is so important, folks, because I got an immense respect for the combine at Michigan that invented modern inflation study. Claudia, when Shapiro and the crew out at Michigan invented all these ways to measure inflation, which is the Michigan approach or the Cleveland Fed approach you use the most?
So respect the data and use every piece of data you can. I mean, that's the part that comes at Michigan, that's in the part at the training at the board, and you see it throughout the Fed. There's a reason that you don't want to get too wedded to one particular measure of inflation and look under the hood. So that's a big piece. Now, of course, then it takes the judgment to look at all those pieces and roll it all up and tell a story. Right, like you have to know the data well enough to be able to tell the story.
Can you tell a story with the way we calculate housing, shelter, rent prices? I mean, we look at the inflation of a dozen eggs and I think we measure it. Do we really measure rents and housing correctly?
We need to be very careful about what the question is that we're trying to answer. So if we want to know what's the cost of living right now, what's housing, what's people paying, the way the CPI does it to look at all these contracts makes total sense, right? Because it's looking at all the different new renters, people who've been there for a while. If you're thinking about what is it the price the Fed should be reacting to, what is it that's happening now, then looking to prices for new rent contracts is very important. And that has been a disconnect and a challenge for the Fed, is that you've had these new rent price contracts for almost 2 years have gotten back to normal inflation. And yet the total shelter, all of that is still elevated. And so you gotta ask the right question and then go find the measurements that you need. And it makes it complicated right now because they're disconnected.
So Claudia, how is this Federal Reserve going to If we get a print that's more or less in line with the consensus, how do you think this Federal Reserve is going to read that?
They'll be relieved. In the Federal Reserve, outside of a crisis, and we are not in a crisis, is a very slow-moving object. It wants to work by consensus, and it is very clear, having looked at, the Fed speak we've gotten from all the different officials, the summary projections, that there's a lot of disagreement. There's a healthy amount, the disagreement is healthy, and yet if they want to pivot and start to begin cutting rates, Jay Powell needs time to build a consensus, and they've made clear they need data, so he needs the data on his side to build it. And that's where you need to have a string of good prints with some lead time to September so that they can get everything together.
Paul, get one more in here before the report.
Exactly right. So, Claudia, here, what's your view of inflation here? Has the Fed gotten its handle on inflation here?
It's hard to say. To me, the focusing so much on the data and getting very cautious, like the trend is clear. It is very clear where we are headed. We are headed back to 2%. It is risky not to put policy and get the outlook going, and they haven't moved off that real data dependence in a way that I'm still concerned will cause problems.
Well, quickly here, Claudia, parse this, because you just hit the heart of the matter. Are we getting back to a John Williams 2.0%, what we had before 2020, or is it going to be a new kind of 2.x%?
I put my weight more on the side of John Williams. The bar is high for big change. I love this. You have to have big institutional change, and yet I don't think we're coming out of this exactly as we went into the crisis.
What we're going to do is we're going to continue with Dr. Sahm. We are privileged today in Bloomberg Surveillance to have Claudia Sahm with us, and then Randall Kroszner will join us after we digest the data with Dr. Sahm. Kroszner, of course, of the Booth School of Chicago, a former governor of the Federal Reserve. We welcome all of you on Android Auto, on Apple CarPlay. Particularly, we welcome you on YouTube. It is our new distribution. It's a modern thing, and actually in the media world, Paul, YouTube's getting a lot of write-up about the mystery of it.
Yeah, Laura Martin, a top media analyst out on Wall Street at Needham, out yesterday with the research note, putting the value of that asset within the Google family, maybe $450 billion.
Well, that was Lisa Mateo putting it over the top.
Exactly, of course, with her newspaper segment, of course.
Let's review the CPI data. Paul and I both agree year over year. McKee goes to month over month. To me, the key number, CPI year over year, 3.1%. Could you imagine a 2.9%?
Yeah, that would be interesting.
To me, that would
get your attention.
That's what I'm watching.
Okay.
What are you watching, Paul?
I mean, again, food and energy here, the core 3.4%. Interesting as well.
Even ticked down.
Yeah, and exactly. So we'll see how this comes out. But again, most folks feel like this Fed has got its handle on this inflation rate. The prices are still too high for consumers. We get that. But what the Fed can focus on is that rate of month over month and year over year inflation.
And of course, we have claims as well. Paul, with Stephanie Roth asking, is it a fully employed America? We welcome all of you across the nation to a look at the CPI report. Claims are constructive and do better. And what we see now with so much of inflation is it comes in decidedly in a disinflationary mode. You're going to see a huge move, I would predict, in the market. Equities lift here. I'm looking at the 10-year real yield. Claudia Sahm would want me to do it. It plunges out of the recent range and moves from 1.99 down to a stunning 1.90, a full 10 basis point move. Paul, go through the list of the inflation. You do it better than me.
CPI, Tom, just right off the headline is
There's a negative symbol.
There's a negative symbol. Let's call that out, 0.1%. Tom, the consensus was a positive 0.1%. So it's lower than the consensus. It's lower than last month. That gets your attention. Food and energy, 0.1% versus a consensus of 0.2%. So you put that all in for the annualized number, Tom. CPI food and energy year on year came in at 3.3%. The consensus was 3.4%, and that was what it was last month. So a slower inflationary environment is what we're seeing here, Tom.
Average wages pretty much level as well, maybe a little bit of an improvement in weekly earnings. And I would finally state the claims reversed from the recent trend to a, this is Claudia's going to be really impressive.
I know.
Worser claims. How about that? It's a better claims statistic, but it's just one data point. On this market-moving CPI report, futures up 8, NASDAQ up 0.2%. The 10-year real yield craters from a 1.99 to 1.91%. We win with Claudia Sahm. Claudia, there's a negative sign on CPI month over month. What does that signal?
It's good. I mean, what's so important about getting these kind of numbers at this point is it goes back, it tells us what we saw the second half of last year, what wasn't supposed to happen, the disinflation without the pain, that was real. And it also tells us a lot of that where we got stuck up at the beginning of this year, that was not the right signal. Right. So this, we get one more month of data, but it actually helps us sort out the different conflicting stories that we've had before. That, we are on this disinflation path, and we have been. And this is very good news. It is one data point, and you don't, it's nice to see a negative ahead of that number. We shouldn't get too, wound up about it. But this is the disinflation story. It's here, and it has been here. It's been under the hood and been hidden.
So how do you think the Fed is going to interpret this data, Claudia? Are they going to look at it on a month basis or kind of maybe a 3-month, 6-month trailing basis? How do they look at some of this CPI data?
We now have 3 months that are good months, right? And frankly, this is another very good month, as with last month. So again, they're not going to want to overreact to 1 month. But we're getting in their 3-month moving average range of these are good numbers. We need to keep them going. We had a whole string of disinflation the second half of last year. The composition, we're all talking about top line numbers. And what's going on under the hood is important. And, good news is good news here. And it is a story. It reinforces the disinflation story, which is what we need to get back to normal.
The market moves. Futures explode up 16. Dow futures up 78. NASDAQ up 0.3%. Small caps almost up 2%. The VIX, a much more attractive number, 12.33. Bloomberg Surveillance across the nation with a stunning inflation report. And we are strong with Claudia Sahm, of course, of Michigan for years and affiliated with the University of Chicago Booth School. The former governor of the Federal Reserve System, Randall Kroszner, joins us now. The market economist, Randy Kroszner, Neil Dutta of Renaissance Macro, puts out a blistering single sentence. The doves have what they need. It is time to cut. What will the PhDs at the Eccles Building advise Chairman Powell?
They will say that we have the foundation for a cut, but they're not going to be ready to go yet. So I think they're going to, as Jay has said over and over again, he needs more data to feel confident that inflation is coming down in a sustained and sustainable way. This is certainly consistent with that. And you could see from the testimony that he gave over the last couple of days, he was talking more about the risks to the downside. That is the risks that the Fed holds rates too long and the economy, and particularly the labor market, slows too much. This is not enough to get them to move at the end of this month. I don't really think that's going to happen, but I do think it sets the foundation for a move in September.
Right. Tough question, Randy. I'm going to ask it with your brilliance, and particularly in financial economics. People will say the elites are benefited by our Fed policy because they are asset heavy, price up, yield down, assets do better. When you're around the table at the Eccles Building, July 31 or into September, is there any discussion of the partition of America where so many Americans need that rate cut now?
Well, certainly the Fed has been very much focused on the labor market. I mean, think back to a few years ago when Jay Powell and the rest of the Fed launched the average inflation targeting, where they said, well, we could run the economy too hot for a little while and that would be okay. So they are very sensitive to that. That is, I think, why Jay is starting to speak so much more about that. The unemployment rate has been 4% or below for a very long time now. That's a very strong labor market, and there has been a lot of generation of jobs, not just at the high end, but really throughout the entirety of the income distribution. But they're sensitive to that, and I think that will lead them to cut by September, but not this month.
So, Randy, when the Fed does begin to cut rates, how do they do it? Do they do it, 4, 5, 6 meetings in a row? Do they alternate? How does that work?
And Paul, your question is the absolute heart of the matter.
Sure, for sure. And so I don't think they know yet how they want to do it. I don't think you remember there's that old phrase that Alan Greenspan had, that you move at a pace that was likely to be measured. So 25 basis points every meeting for like 2 years. I don't think they want to do something like that.
See, Randy, you're busting my chops with this. Paul asked the money question here, but Randy, we are wedded to a Greenspanian mathematics on this. Are we wrong to do that? I mean, should we be more creative about it? Back to McChesney Martin or Arthur Burns? Should we have a new formula forward beside a measured Greenspan?
Yeah, I don't think they're going to do the measured pace. I think there was pretty clear consensus even when I was there, which is now a while ago, that measured pace was not the best way to do things. And so I think that they will move, and you can see when they moved interest rates up, that was not at a measured pace. That was pretty rapid. So I think they'll bring interest rates down. I think they'll bring them down somewhat gradually at first, but if they see the labor market really weakening, they'll start to move quickly. That'll be too late to prevent the labor market from softening substantially, but they have to weigh the risks of calling all clear too early, getting back into what happened in the late 70s, early 80s, where they did that, and then inflation reignited and they had to raise rates really high, got a really bad recession. They'd rather wait a little bit, perhaps a little bit too long to buy some insurance against that upside inflation scenario. But then they can cut and just have a slowdown, maybe a mild recession, but something that would be much less worse than what they had in the early 80s.
All right, Randy, so today's inflation data, certainly showing some slowing inflation. We heard from Fed Chairman Jay Powell over the last 2 days speaking in front of Congress, focusing, I think, a lot of investors said, boy, he's really kind of focused on the labor market, the employment market, and citing some slowdowns there, just some softness there. How do you think about the labor market, and how do you think the Federal Reserve thinks about the labor market?
So I think they see that, I think, is really the key on both the demand side as well as on the supply side. So on the supply side, they look a lot at wage growth, and wage growth has been coming down a bit. It's still now 3.9% rather than 4.1%, substantially above their inflation target. And given how important wages are in the cost structure of both, well, certainly services firms, but even manufacturing firms, unless productivity really spikes up, that's going to have to come down a little bit more. On the demand side, obviously, when there's good real wage growth, as there has been, that is that wages have been growing fast, and nominal wages have been growing faster than inflation. That's a big plus for households continuing demand, and they want to keep that balance just right.
Professor Kroszner, stay with us. Don't go away. At the Booth School, Chicago, with his great work at opening Booth School in London here a number of years ago, Randall Kroszner, the former governor of the Fed. Kate Moore of BlackRock scheduled to be with us here in a number of minutes. We come to you commercial-free across America, around the world, to a true disinflationary report. A negative statistic on one of the items was the real shock to me. Futures explode up 16 after the big move up yesterday. Do you think it was pre-release, Paul? You think somebody knew something yesterday?
I don't know.
I'm trying to make a plot here.
Exactly.
Kroszner's going to hang up if I say they knew ahead of time. The VIX 12.53. The 10-year real yield plunged really out of range, went down to 1.90. Comes back a little bit, but at a 1.95, critically at a lower range. Let's stay with Randall Kroszner here, a Booth School, and then Paul will bring in Kate Moore here in a bit. Randy, we're learning so much, and what I learned was from David Rosenberg at Merrill Lynch a million years ago, that the financial media focuses on one statistic, or maybe we get sophisticated and we look at three statistics. Pros like you, and Kate Moore for that matter, look at 47 or 55 inflation statistics. Which is the one you're looking at right now? What is the subset of data that matters to Randall Kroszner?
It's not really the CPI. It's the Personal Consumption Expenditure Index, the PCE that comes out with the GDP report. That's what the Fed has said that they really focus on. think that's reasonable because if you look at the weightings in the CPI, a very large fraction of it is around rents. And so, some of the oddities that we get with rents, whether it's, last month there's a big spike up in New York City rents. There's a big lag in the way that rents are come into. Well, it's owner-occupied housing, but it's really rental numbers that come in that sort of lag things. Because as you know, people usually sign one-year contracts for rents, and so we're finding out a lot about what happened last year rather than what's happening currently. Less of a weight on that in the PCE index, and so the Fed really focuses more on that, and I think that's reasonable to do.
Okay, Randy, this is really important, and I mean, Brown University economics, Paul, it's a little different than Harvard undergraduate economics. The gentleman at Harvard, Jason Furman, I think you know who he is, Randall Kroszner.
Oh, yes.
Jason Furman of Ec10 fame launches a tweet out moments ago, amazing inflation data for June. What's exclamation points? They do that at Harvard. Yep. Brown University, Poole said no exclamation points ever. Come on, Randy, the Fed's got to adjust to this report. Explain how they adjust as they stagger to July 31st.
So certainly they will take this on board, and I think, as you can see from the minutes that I think are reflected in some of Jay's recent testimony, there's a lot more concern about the potential downsides and the risks of keeping interest rates high for too long. Right. They will take that on board, and I think what they will do is, I don't think they're going to move, but I think what they're going to do is lay the foundation for move in September. Because in some sense, Jay laid the foundation for changing the wording and changing the press conference feeling in July, and because the Fed in its communication moves at a pace that is likely to be gradual, and so they lay the foundation for changing the wording in July to be able to lay the foundation for actually making a change in September. So I think that's what you're most likely to hear.
Randy, thank you so much. And just for the record, Professor Kroszner, I would kill to get Professor Kroszner and Professor Furman on at the same time.
Yep.
That's a giant in financial economics and a giant in policy economics.
Yep.
Randy Kroszner, the Booth School, thank you so much. Futures up 11.
All right, very good. From economics to these markets, in a day when we've got CPI coming in a little bit softer than expected. Maybe that's good for the folks that are watching the Fed. Maybe some more ammunition to cut rates. The S&P futures up 0.2%, NASDAQ up 0.25%. Let's go to those markets right now. Kate Moore, she's head of Thematic Strategy and Global Allocation at a little firm called BlackRock. So, Kate, I'd love to get your thoughts here on this inflation print we saw this morning. What does it mean for you?
Look, I think this is the latest in a string of good news for the equity market. One of the things I was really considering as we finished off the second quarter was that, most people were skeptical about the sustainability of the equity market going into the second half of the year. They're a little anxious that we can't repeat returns. I think this message that we're getting now, that the Fed is going to be in a place where they can they can start to ease policy and continue to guide us, that is the path into the beginning of 2025. Is going to be quite supportive for equity markets. But it's not the whole story, right? I mean, lower rates are certainly a support, but that's not what's really driving the equity markets in 2024. It's really been in earnings and a fundamental story. So now, us equity investors, we have to turn our attention to earnings, which are kicking off any moment.
So what do you expect to see here? We had some of the numbers today. Delta, a little bit weaker than expected on some costs. Pepsi, a little bit weaker on some top line there. What are your expectations here for earnings this cycle?
Yeah, so, okay, let's get out this to begin with. The baseline consensus is looking for a 7.5% to 8% EPS growth for the second quarter. That's obviously a little bit of an acceleration from the first quarter. So this is what I'm talking about between the price moves and where consensus is from bottom-up basis. We're kind of at a hot place. But I will say, as much as people are anxious about a pullback and, get worried that multiples have expanded, there are a couple reasons I think this earnings season could meet these high expectations. So first, I'm going to make this point around pre-announcements, because I watch this really closely. When you're going into earnings season, people may put out all the bad news that they need to early, And there have been very few negative pre-announcements this quarter, especially relative to what we got in the first quarter of 24, which was still a good earnings quarter. So no one is coming out trying to front run the market here and get the bad news out before earnings, which I think is actually a very positive signal.
Kate,
and then the second thing.
Oh, please go ahead. No, continue. Kate Moore, you deserve a second thing. Give us a second thing.
The second thing I was going to say is earnings revision ratios. This is like the ratio of upgrades to downgrades from the bottom-up analysts. And over the last 1 month, the earnings revision ratios for the US, and particularly for the biggest parts that matter, like tech, have been very positive. In tech, we've had more than 2 upgrades for every 1 downgrade. And, that's not a sign going into earnings season that people are seeing any signs of weakness.
Ira Jersey is going to be with us in a bit. We're still with Kate Moore, BlackRock, and Mr. Jersey and his team. I mean, Kate, it's not like you where you're alone and you're understaffed. Jersey's got like 7 people right now writing and working on the moment. And Ira's, of course, talking about key ranges here in the fixed income market. I want you to bring that over to the equity market. Ira Jersey says 4.18% on a 10-year yield is a big deal. Right now, the 10-year yield is 4.20%. How do equities react if yields go price up, yield down outside the recent range?
Price up, yield down, I think would be really supportive for big parts of the market. You may actually see a little bit of action in the small and mid caps, which have been, as we know, huge laggards.
Up 1.8% right now.
Yeah. And here's what I'll say. Fundamentally, that segment of the market is not as strong as what we see in the large cap indices and the mega cap companies. That said, this is the news that we need for smaller segments of the business community, that rates are on the path down because we know that has been a headwind for operations.
I got one more question, Kate Moore, and then we got to go over to Ira Jersey to tell us what to do. You don't remember the analogs that we remember, the Nifty 60, Nifty 50 rather in the 60s and all that, even 99, 2000. Does Kate Moore have an equity market analog you're working off of, or is this a whole new world after all?
Yeah, Tom, I do remember 99, 2000. Don't worry, I'm not that young. But what I will say is I don't see a perfect analog right here. And I know everyone wants to pick a period in history and say it looks just like this, and it's a comfort. People like that comfort. But we are in the midst of, I think, a massive technological change here with the advent of AI, and as companies try and figure out how to adopt AI and figure out the use cases and what the best way to work with this technology is. And I think that's going to lead to this incredible, bifurcation in the market. Companies that have access to the technology, have access to amazing data sets and are using it appropriately, and those that don't. You're starting to see that separation in earnings already. And I just don't know that or at least in the lifetime I've been in, almost 5 decades, that we've seen this significant of a technological change.
Kate Moore, thank you so much. BlackRock, she's got to talk to her esteemed colleagues at BlackRock right now. Greatly appreciate that. I got to be honest, folks. We really don't care what Ira Jersey thinks about rates. Here with futures up 6. It's a nice lift to the market after the excitement of 831. Ira Jersey joins us now with Bloomberg Intelligence, and he is a surveillance soccer expert. England or Spain?
Wow.
Discuss.
I'm going to go with Spain. They've just looked really good, and they are a very organized team. And England, until yesterday, had a big problem scoring. So, I think it'll be a fun game. It's certainly 2 very good teams, so it'll be fun to watch.
I was briefed by Mr. Farrow earlier this morning. He made clear it was a VAR gift to the English. Did England steal that from the Netherlands?
I don't know. They were, I think, on the day either of those 2 teams could have won. It's not a big surprise. I'm not sure about that particular call, but at the same time, it's England got a deserved win. So, I'm a Villa supporter, so Ollie Watkins scoring is helpful. So
there's your obligatory soccer talk for the day in the middle of huge inflation data. Paul, why don't you get us on the straight and narrow?
Exactly. All right, Ira, we had this inflation print came in a little bit softer than expected. What's your market? What's the Treasury market telling you about what we saw in the inflation print?
Yeah, so the Treasury market liked it, and the Treasury market has rallied. We've seen some what we call bull steepening. So you have the front end yields. So yields on the 2-year note are lower more than yields on the long end of the yield curve. So that's what we call bull steepening of the curve, and that's not a huge surprise because what this data does, it gives more confidence to the market that not only might the Fed cut in September, but once they do start to cut, assuming that we continue to have reasonably decent inflation prints and a slowing economy, that the Fed will probably go more regularly. And that's one of the reasons why you see the shorter end of the yield curve, the 2-year note and 5-year note, do a little bit better than the long end because that tends to be far more sensitive to interest rate cuts by the Fed. So it's not a huge surprise. And Tom, as you noted, 4.18% on the 10-year is actually a pretty important technical level because below that we're going to test 4% again. And I think 4% is more of a psychological level than anything economically important. But nonetheless, you can wind up seeing a pretty big move.
We printed under 4.18, but to pros like you, Ira, you need a close under 4.18. Am I right?
Yeah, that's correct. Yeah, so we do need to see I call it a convincing break. So what often happens is you can make all these lines on charts, and ultimately what usually you use those for are things like putting stop losses or stop reverses in. So if you're short the market, for example, you hope that interest rates will go up, right? So yields will go up, and if so if you say okay, 4.18% is a key technical level, you'll put a stop in at 417 or 416. So you need a more convincing break than just like half a basis point.
Ira, I'm looking at the WIRP function, world interest rate probability. If I'm reading this correctly, market's looking maybe like an 85% chance of a rate cut in September.
Oh, listen to you. You're doing your WIRP? Cool.
I am. Can I pencil that in, Ira? Can I put it in with ink? What do we do here?
Well, the market certainly is coming around to that thought. I've been very skeptical that the Fed would have enough good data to go in September, but today's data was certainly good. We remember we still have a bunch of prints before then, so we still have 2 more inflation data. Plus, we have all the PC numbers as well as the spending and payrolls, right? So we have all of the important data that we're going to get over the next couple of months, and if that turns around and this happens to be the weakest inflation print over over that 3-month period, then maybe September's off the table. But the market certainly is pricing for a September cut. I think what's important though is that we were also priced in now for another cut after that in November, excuse me. So basically the market is starting to price for a string of cuts as opposed to just one and then a pause for a little while.
I got 1 minute. That's all. I'm so sorry. How does our world change if we get a close of 3.99% on the 10-year yield? I don't think anybody's ready for that.
Yeah, it doesn't change a ton, but what the 10-year going down that low, you would see lower mortgage rates, right? So you would see certainly, I think some corporates start to come in and maybe pre-refinance some higher coupon debt that they issued, say 2 or 3 years ago. So you can end up having a situation where, ironically, lower rates leads to easier financial conditions, and that actually might work against what the Fed wants to do, or do the Fed's work for them. So certainly, though, you're only going to get there if the market is more convinced that the Fed's going to cut pretty aggressively.
Ira Jersey, thank you so much. Greatly appreciated. What a great art. I mean, to have Sahm and Kroszner.
Wow. One
Kate
after the
Moore,
other.
And an Ira Jersey.
Yeah.
It's amazing. You get the add-on of the interns.
I know.
And everything just gets easier.
Absolutely. Hey, Tom, moves in the currency markets. The yen rallying here. Now, 158.92. We were at 161 just a good day or so ago. So big move there. Thank you, Ari, for that. So
it's great. I mean, I'm listening to the people in the bond market, and they're going, "We got to hold on to what we've got."
Yeah.
It doesn't make a difference if you make it or not. It's Sambora's birthday.
Oh, big.
He's 49.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
We're addicted to the parlor game, the Fed, the monetary ballet.
Where do you see opportunities in a fixed income space here in 24?
With Lisa Mateo on markets.
AI affecting demand for cloud computing.
And Michael Barr with news.
Another legal setback for Donald Trump, this time across the pond.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Michael Barr, Jen Tucker in for Lisa Mateo. Market-moving CPI report with a negative statistic on one of the series, a month-over-month series. So it's a big shock to see that negative number. Equities exploded higher, yields come in, and they've reversed here in the last 30 minutes as people digest the data. Paul, maybe a little bit of a angst as well. Early this morning, Delta and Pepsi saying there are new challenges out there.
Yeah, exactly right. So we had some weaker than expected results from a couple of names. Of course, on the earnings front, it's all about the banks starting tomorrow, Tom. Yields here, they're still lower here. The 10-year Treasury is off about 9 basis points, 4.19%, Tom.
We're going to keep this quick here. Michael Darda will be with us in moments. From the Interactive Broker Studios with futures red, -5, John Tucker.
All right, Fed Chair Jerome Powell yesterday saying he needed more confidence that inflation was slowing before moving to cut rates. He's got more evidence now. CPI prints showing inflation slowing more than expected last month. Prices fell from a month earlier, and you heard former Fed Governor Randy Kroszner telling Bloomberg Surveillance a little earlier. This does set the stage for a move in September. Treasury yields have fallen 2-year, 11 basis points lower, 451 10-year right now, 9 basis points lower, and that is at just below 420 at this point. Stock futures initially popping higher. They have since moved to being relatively unchanged, as Paul mentioned. Some of the individual shares on the move this morning, among the most active in the pre-market, shares of Pfizer. They are up close to 3%, moving forward with a weight loss pill. They're trying to crack the multi-billion-dollar market for obesity medications. Other companies opening their books. Delta Airlines expecting profit this quarter to fall short of estimates. They're blaming heavy competition that's driving ticket prices down. And PepsiCo reporting weaker than expected sales growth. And we check the markets for you all day long. Right here on Bloomberg Radio, I'm John Tucker, and that is your Bloomberg Business Flash. Paul and Tom.
John Tucker, thanks so much. On Sunday, he writes a note blending in economics and his finance and investment. Michael Darda at Roth joins us now. There's a single sentence, Michael Darda. The history of central banking is the history of fighting the last war. Which war is Jerome Powell fighting right now with this new report of disinflation?
Thanks for having me on, Tom. Obviously, they're fighting the inflationary war here still, a war of their own making. So coming into this business cycle expansion, the Fed did a historic open-ended stimulus combined with, world war levels of fiscal expansion. And then we had a 2-year inflation overshoot with a booming V-shaped nominal GDP growth recovery that we didn't see in the last cycle. Okay, so why did that happen? Well, there was a perception that even with all that stimulus, we wouldn't be able to get the economy going and that inflation wouldn't get back up to target. So we certainly learned that lesson. And so now I think, you mentioned Powell yesterday saying they want more confidence that inflation really is returning to target. And I think they're going to get that confidence. This is the second month in a row, actually, where super core services inflation has been negative month over month. And we had a few, hot readings before that.
Right.
So July's probably too soon, but I do think it looks increasing like the first rate cut is going to be in the bag for September.
Paul insists I do a nerd question here. It keeps the plot going here at 9 a.m. Good morning on YouTube across America. Michael Darda with us after this stunning disinflation report. I think we're on the same page, Michael Darda. I see nominal GDP coming in. I saw it in organic revenue growth at Pepsi today. Is the Fed establishing now an understanding of the new nominal GDP regime forward?
Well, I hope so, Tom. I mean, nominal growth for this cycle has averaged double digits, and that's why we've been in a high inflation cycle. Why was inflation low during the last cycle? Nominal growth averaged just about 4% per annum. So with productive capacity growing around 2% per annum, that's about 4% nominal growth would be about what you'd want for price stability for the Fed to hit its inflation target. I think nominal growth ran about 3%, 3.5% in Q2. So for the first half of this year, as an average, sub 4%. The Fed's policy rate is 5.3. We have the unemployment rate up 0.7 from the cyclical trough seen last year in January and April, something that you don't see historically unless the economy is on the front edge of a recession. So I think the Fed is on a tightrope here, wanting increasing confidence that inflation is rolling over, but with nominal growth slowing and inflation expectations coming in, right? They're at the low end of what would be considered consistent with price stability. I do think the risk here is that the Fed actually falls a bit behind the curve, resides over a passive tightening of monetary conditions, and that's how the business cycle could flip away from us.
Paul Sweeney, using the Bloomberg terminal, Kathy Jones agrees with Michael Dart as she features the breakdown of supercore CPI.
Okay, very good. Michael, are we in fact experiencing right now a soft landing?
No doubt about it, Paul. We have been in a soft landing in the sense that the economy is slowing, at least nominal growth has been slowing consistently and persistently, but not in a way that has catalyzed a recessionary condition yet. But frankly, we could be much closer to that than many believe. I mentioned the unemployment rate moving 0.7 off of the cyclical trough. And so a late cycle environment, early innings of recession, can look a lot like a soft landing. And it's a soft landing until it's not. And in order to preserve the soft landing, it really requires the Fed to have a foresight and a timing that it hasn't demonstrated in the past. So, I'm obviously a bit skeptical, but we have this incredible AI frenzy going on that's driven the S&P up to dizzying heights. So there's a lot of optimism in certain pockets of the equity market that are related to these new technologies where there are incredibly high hopes. So looking at all of that, I think it probably does play into a bit of hesitation on the part of the Fed. They likely will move in September, but even so could end up a bit behind the curve here. And I do think that means ongoing elevated business cycle.
I don't know the math here, Paul, but NVIDIA just broke out to a 136 level.
Yeah,
it just doesn't stop.
It doesn't stop. And that kind of goes to the point, Michael. We talk a lot about this economic data, whether it's inflation or jobs or GDP, but boy, the vast majority of Americans feel pinched here. And there's not much the Fed can do about that, right? Prices are where they are. They generally don't go down. It's just a question of the rate of inflation. And I guess the Fed can't do much for most of these Americans out there.
Yeah, that is true, Paul. I mean, the Fed isn't going to be able to preside over a deflationary period to correct the rise in the price level. That would, end up precipitating likely a huge crash in the labor market, which, I don't think anybody wants to see. So the best thing the Fed can do here is restore price stability, and then I would say try to be a bit more forward-looking so we stay out of these boom-to-bust cycles. And with that, that's really the best thing that they could do to lay the foundation for sustainable, tight labor markets. But the key word is sustainable. If you have price stability, you're not in a sustainable situation for the labor market. So that's where I think we need to go. That's what the Fed could do to help. But trying to catalyze a big deflation to reverse the previous inflation, not probably possible without a huge loss function for the labor market.
Michael Darter, thank you so much with Roth Partners here this morning. Paul, you nailed it. You're way out in front of the zeitgeist. Sweeney notices an almost 2 standard deviation strength in Japanese yen. We need to clarify this. I see no headlines talking about intervention. There will be people out there saying, under the cover of U.S. inflation, this, that, or the other thing happened in Japan. I see no indication of that now. The Japanese yen rallies 2% against dollar. Another headline, yen surges as traders bail on crowded short bets.
That's what that feels
I like that.
Yeah, that's kind of what I think we're seeing in there, some of this, because we got all the way out to 162, almost 161, almost 162, and here we are, got a big move on
But
the
I
CPI
see
print.
no intervention, gossip, or speculation. That's important. Also important, our news in New York City. Michael Barr.
Thank you very much, Tom, Paul, John. President Joe Biden faces mounting opposition within his own party. Axios reported that Senate Majority Leader Chuck Schumer is open to replacing Biden as the Democrats' nominee. Bloomberg government reporter Jack Fitzpatrick spoke to Bloomberg Daybreak.
Senator Schumer outwardly is saying he's still with Biden. My colleague Eric Wasson caught him just after that Axios report, and the majority leader of the Senate said he's with Joe, but the private possibility of signaling openness to another nominee is a significant development, as members at times call for the president to drop out, but others sort of stay in a gray area, saying they support the president but somehow signal openness to another nominee.
Bloomberg government reporter Jack Fitzpatrick on Bloomberg Daybreak. Meanwhile, today, President Biden will close out the NATO summit in Washington with a solo press conference. Last night, during his dinner toast, NATO Secretary General Jens Stoltenberg touted the alliance.
We are not a normal family with totally normal friends and partners, because we are a military alliance with close partners that we work together with every day. So therefore, a toast for the most successful, the strongest, and the longest-lasting alliance in history.
Secretary General Stoltenberg and NATO members celebrated 75 years of the Defense Alliance. Boeing Starliner says they are confident the spacecraft can get 2 astronauts home safely. The 2 former Navy members have been aboard the International Space Station for more than a month after Starliner experienced mechanical issues, including helium leaks and thruster issues that delayed their flight back. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Tom, Paul, John.
We got to get out front of this. I mean, Michael Nathanson's coming up. And, a hitter like him. He's got, Rivera of the Yankees in the backdrop behind him. I mean,
I like that.
The Yankees have cratered. I mean, it's embarrassing. And they're out seriously. They're looking for 4 relief pitchers.
I don't know what's going
in the deadline. I mean, they're the Yankees. They gotta right the ship.
Well, thank goodness they won last night. But yeah, I mean, this has been, look out, people on Fifth Avenue, because the wagon wheels fell off, man, and are rolling. I bought all in the first couple of months of the Yankees because they were playing like
I did too.
1998 baseball.
Yeah, and then all of a sudden, I don't know what happened. By the way, the Mets, they're over 500 now.
Right.
So this is interesting.
Nathanson's in entertainment. He could dovetail this. I mean, he could be like George Costanza. He could work for the Yankees.
He could do that.
Solve the relief problem. You can't bring Rivera
Cotton
back,
uniforms, bring him back.
So
there's all kinds of stuff going on there.
I'm like you. I was hook, line, and sinker. I'm a Red Sox fan, and I was talking about the dreaded Yankees like it was 1927.
Yeah, I bought in.
Red Sox are back in the discussion, Tom.
Yeah.
You're going to have some baseball this summer to pay attention to.
There's a lot of baseball. It's with a new playoff format. Like there's 30 teams, Michael Barr. Bloomberg Business Sports, 32 of the 30 teams are eligible to go to the World Series, right?
And real quickly, the worst team in baseball, the Chicago White Sox, pitcher yesterday pitched the immaculate inning. 9 pitches, 3 strikes each.
Wow, very good.
Nice story.
CPI report moves the markets. We do showbiz with Michael Nathanson in a moment. It's Bloomberg Surveillance.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom, with this Bloomberg Business Flash. Really good report, to borrow Fed Chair Jerome Powell's words. Consumer Price Index cooling broadly for the month of June, driven by this long-awaited slowdown in housing costs. Fed swaps now pricing in more easing for 2024. We get two more inflation and jobs reports before the September FOMC meeting. Some of the individual shares on the move. Delta Airlines warning that domestic carriers struggling to fill planes in the all-important summer travel season, dragging down ticket prices in a fare war that's weighing on profits. They're offering that grim assessment this morning, reporting worse than expected financial results. Right now, we have futures higher, stock futures, Dow futures up 20 points, S&P E-mini futures a point higher right now. And as we look at years, the 2-year 12 basis points lower, 449.
Listen to John Tucker quoting basis points.
The 10-year
Lisa doesn't do that.
Close to 10 basis points lower. That's
Very
at 4.18%.
It's moving. Yeah.
And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Paul Tom.
Thank you. We've anticipated this so much. Michael Nathanson works with a guy named Craig Moffett. And to be blunt, they'll do like a 20-page report, 40-page report. There's no one in Hollywood who does not read it, is how I would put it. Everybody reads it, cover to cover. It's gospel. Michael Nathanson joins us right now. Michael, I want to get one question in here before Paul goes to the madness that's going out in Hollywood. NBC is bringing in $1.2 billion large on the Olympics. The boats down the River Center sold out. The closing ceremony sold out. All that. Gus doing dressage is sold out. Everything's sold out. But are we going to watch the Olympics?
I don't know, Tom. I don't think so. I think the Olympic moment has passed us by. I really do. I think last time we talked about this, the previous Olympics, part of the problem is you don't know where to find it. You know, it's on Peacock, and they've spread it all out. And, you know, sometimes the games are in real time. So, you know, you're not in front of the set or in front of your computer when things are happening. I don't know. I think, especially in European time zones, it's not ideal. So I'd say to you, I'm more bearish on the Olympics than other sports at this point in time.
All right. So, Michael, I guess one of the data points that really sets the bar of where the media business is today is Paramount. Sherry Redstone finally agreed to sell the company, arguably maybe 5 years too late. But what do you make of how this whole thing unfurled? It seems like I always joke on air that 5 years ago, people like me or you could have sold this company with 3 phone calls. What happened here?
Yeah, Paul, it's mind-boggling and kind of sad how this all went down,
sad is
right?
word.
It's sad.
Thank you. Sad is dead on.
And Tom, you know what? It's sad because there's so many jobs that are being lost because of bad management and bad decision-making. And Paul's right. 5 years ago, this would have been easier. What's weird to me is that she walked away from a similar deal less than a month ago. She has 3 people in place with new business plans, selling assets, and then comes back to the table, right? And it's like, you don't have a CEO there. You have 3 co-CEOs. It's been managed to death, right? And we would have argued 3 years ago when they went into streaming that they didn't understand their balance sheet. They couldn't afford a streaming war because all their exposure to profits are tied to cable networks, right? So the decision to do what they did was idiotic. And they could have stopped along the way and rethought the strategy. But she went to a place where she had few options. I would have preferred, if I was a shareholder, to see where the new 3 CEO strategy played out before she went back to the table. It's you know, just look at the amount of wealth lost in the Redstone family versus the Murdochs, right? Or the Roberts family, right? Like, they were all in similar places 20 years ago when Paul covered the sector, and their fortunes have diverged massively because of bad decision-making. It's that simple. It really is.
So I guess, Michael, the attention now probably moves to Warner Brothers Discovery. Thank goodness David Zaslav's out in Sun Valley holding court, as he likes to do. What happens to that company?
Yeah, the big issue they have right now is it appears they're going to lose the NBA. And the NBA is the most important asset they have in their cable network business, right? if they lose the NBA, and there's some question about will they go after the NBA and say, look, we have a right to renegotiate, that it's not clear if they've lost it or not. So this is going to be fun to watch. But he will need to replace the NBA with something else. I don't know what that something else is, because there's really nothing available of the NBA scale to license now. I think, again, having all that leverage tied to cable networks is a very, very tough hand.
Right.
He has very few options here. Either, there's not a lot of M&A left to do. There's not a lot of sports rights to buy. He has to manage the business down, basically,
Mike, I got like 8 ways to go here. I want to ask about CBS. Okay. I don't have the time. I want to ask about this. I want to ask what Mario Gabelli's going to do, et cetera. Gordon Crawford, if he's still working at Capital Group. Forget about it all. What's your single best buy in your beleaguered world? The Yankees are terrible. Entertainment is terrible. What is Michael Nathanson going along with enthusiasm right now?
Yeah, it's funny because this whole year we always said, hey, we have a couple of short ideas for you. Most of your investors are not shorting stocks. Our view, and Robert Fishman and I cover media, Disney south of 100 feels like that's a good opportunity. It is, because in the streaming wars, they're number 2 to Netflix. Netflix is 1, we know that. Netflix is valued at a very, 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 very high multiple, and Disney's entire enterprise value is below that of Netflix. So I look at Disney and think to myself, their streaming business, which at once was very highly valued, is kind of forgotten about. And Parks is a really stable business. I know we're heading into, I don't know if we're heading into a slowdown. It feels like the market thinks we are, but the park business is pretty stable. It's Disney, and their content cycle finally starting to go the right way. Right. And they have Deadpool 3 coming. So I don't know, Tom, it's a 25%, 30% upside on Diz, but the issue is going to be, look, they're still, dealing with linear network decline. That's just hard to ignore.
Paul, get one more in here.
Yeah. On Disney, Michael, I'd love to get your thoughts on Bob Iger and succession plans here. Is there a viable plan there, do you think? And is it one that the street will embrace once we can kind of learn about it?
Well, there's a viable plan there because it's the single most important objective the board has to solve for, right? So it was done incorrectly or badly the last time. The board knows this is their priority. There is an activist in there challenging them on how they did it the last time. They won't mess it up. I mean, they will go through a good process. In terms of who is going to be, there are 3 or 4 names internally. We are at this point watching on the outside. Right. I don't think it's going to be messed up. And the choice is going to be vetted and tested, and it won't be challenged as a bad process.
20 seconds. What do your beloved Yankees do? What's the Nathanson formula to take the Giants of May back to something respectable in September?
Well, Tom, over the past decade or so, I would have said you need to change the general manager. And you need to change, and Aaron Boone. Like, I think they've constructed a bad team time and time again. And it goes with the construction. And I've been saying this forever. Brian Cashman won when the game was different in terms of the money they're able to spend. And I think they have to start again and basically rebuild it to the team they had, the type of team they had 20 years ago. Contact hitters, get on base guys. The swing for the fence mentality just doesn't work. And their pitching staff continually disappoints.
Paul, we're in the wrong business. He's talking Yankees, and the YouTube live chat lights up like a candle.
I know, exactly.
Michael Nathanson.
But Tom, we missed the Ranger postmortem because that would have been fun. I mean, let me come back next year and do a Rangers podcast.
Come back next week. Bring Moffitt with you. Michael Nathanson, thank you so much. Moffitt Nathanson, definitive in entertainment. Can't say enough about that. Without question, the YouTube live chat of the day, trophy taker Randy, his allocation, 50% SPX, 50% lotto tickets.
There you go. There you go. Just by
Thank you for that. Can we get him tomorrow on the 7C block, Randy from wherever? That's great. 50% SPX, 50% lotto tickets. So John Tucker, that's sort of your strategy, isn't it?
Oh, yeah. 50,
roll the dice.
Line up the Wawa. You buying the tickets at the Wawa? We'll have to see. Green on the screen. We went up big. We came down red on the screen. We come back. Futures flat. Bloomberg Surveillance. Good morning.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with his Bloomberg Business Flash, waiting for the opening bell at the New York Stock Exchange. Ahead of that, Treasury is falling. Fed swaps projecting more easing this year, almost fully pricing in a September reduction. The core consumer price index climbing 0.1%. That's the smallest advance since August of 2021. And earnings season also underway. Right out of the gate, S&P 500 adding to its record close yesterday. Right now, 2 points higher. We're at 5635. The Nasdaq Composite Index 10 points higher at 18,688. The Dow Jones Industrial Average right now up 25 points, 39,750 on the index. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's the opening bell report. Tom.
Paul, did you agree with me? Tucker does a bull market data check better than a bear market data check.
Fair weather friend.
Have you done the opening of the 401k? Are you still a 201k?
No, it's I would say it's a 501k now.
Really?
We've been doing quite well since the start of the year, so you know.
Okay.
He's killing it.
So your actual point of retirement's what? 2034.
I give myself another 10, 15. if they'll, that's the important caveat, if they'll have me.
If they'll have you, I believe they will. Sparta adores your work. Thank you so much, John Tucker. Do we have Lisa back tomorrow? Is it another day?
It'll be Monday. Suffer through me.
And you're not here tomorrow.
No, God forbid.
So it's me and the John Tucker show.
We can pull this off,
Do I have a guest?
We
can
pull this
we
off.
sell a guest for tomorrow's? Or do I have a co-anchor tomorrow? Or we're efforting to co-anchor.
You're already getting rid of me.
That's
okay.
Gur is fly fishing somewhere, something like that. We say good morning to all of you. They hand me, I get it late at night, like with the daylight savings time, sometimes the sun set. And the butler comes in with a silver platter and gives me the guest list for the next day. And the only name I saw when they gave me the list last night at 8:30 was Charles Lieberman. Chuck Lieberman has a few miles under the belt, under the road. He's CIO. Yeah, Chemical Bank. Exactly. That's 90% of the audience doesn't even know how important Chemical Bank and Chuck Lieberman were years ago with advisors, capital management. Someone with experience joins us. Chuck Lieberman, most of our listeners and viewers have never experienced this character of a bull market. What character is this bull market?
Well, believe it or not, I think it's based on fundamentals. Thanks, Tom, for that warm introduction. We go back a long ways. And you and I remember that over time, the economy grows. The markets are volatile. They go up and down. But nonetheless, ultimately, the market is tied to the economy. And the economy has done very well. GDP is at record high levels. Household income is at record high levels. Household finances are in great shape. There's no reason for the market to be anything other than at record levels.
So how do we think about equities versus fixed income, Chuck? Where are the best value, the best opportunities here? What's your asset allocation?
Well, I think the S&P 493 is very attractive. You can find lots of great values there. The market's fixated, of course, on the Magnificent Seven. And in many cases, I think they deserve their high valuations. They are growing rapidly, so they should have a high value and a high valuation. Maybe in some cases, they're a little bit extended, but it's easy actually finding very good values among the 493. And when people look at the S&P PE multiple and they compare it historically, they're comparing apples and oranges. Today, the 500 is dominated by the 7. And so it distorts the PE multiple upwards, and it gives the impression that the whole market's expensive. And that's just not the case.
Chuck Lieberman, I had a big lecture this morning on this. I was saying to one of our younger youth that the PE is overrated and you need to look at other denominators with price, like price to cash flow, et cetera. Do you rely on price to earnings?
It's one of the metrics we look at, But I agree with you. I think price to cash flow is far more important. And that's far more of what we look at. We also look at balance sheets. We look at competitive positions of companies. We're doing this from the bottom up. The overall numbers, when you look at P multiples for the S&P 500 or even the 493, it's a mix of everything under the sun. And that's not the way to pick investments. When you look at specific companies, you can find great companies at reasonable multiples with good dividends in many cases and good prospects.
Paul, Apple, free cash flow.
Oh, boy.
The pandemic bottom. They're selling a lot of iPhones.
Yep.
73 gazillion.
Yep.
Now they're modeling a year out from now, 117.
Yep.
73 to 117 growth of free cash flow.
Buying back a lot of stock. Chuck, we're going to hear from some of our big bank friends tomorrow, including Jamie Dimon. How do you think about the money center banks here these days as an opportunity?
I like them all. The banking sector got crushed a year and a half ago because of the failure of Silicon Valley Bank, and it revealed some other problems across the banking sector. They're all being repaired or have already been repaired. Balance sheets are actually in very good shape, plenty of excess capital. The Fed is slowly but surely ramping up capital requirements for banks, and yet they're meeting those hurdles, and they're buying back stock. They've been a bit volatile, but recently they've done fairly well. And I think they're still quite cheap pretty much across the board. I like all the money centers. When you get to the regionals, there are more issues because they have more exposure to commercial real estate. And we know that there are problems in that sector.
Right.
But companies are all pushing out loans. They're getting the borrowers to put up a little more capital. They're extending the loans. They're buying time. And time will fix these problems. So I'm really comfortable with most of the larger regionals. I think they have very, very good value. They're still very cheap. They've also come back a bit in recent weeks, but they're still quite cheap from a long-term perspective.
For all of you worldwide and across the nation, this is a joy, and I must say an honor as well, with the heritage, the resume of Paul Sweeney and Chuck Lieberman. I don't think 99.9% of people, Paul, know this, that J.P. Morgan Chase came from Chemical Bank. Chemical Bank did a roll-up with Chuck Lieberman of Chase Manhattan Bank, Manny, where I was as a child. I could only shave one day a week. Texas Commerce and the Corn Exchange Bank. And they were rolled into Chemical Bank, and then basically they did a redo name and called it, Chase Manhattan. What was that like, Chuck Lieberman, when Chemical Bank did the mother of all roll-ups?
It was astonishing. I never thought that the government would approve all those deals. I was blown away that they did, but it created a real powerhouse. And I remember one of the questions I was asked, take two mediocre banks, Chemical and Manny, combine them, and what do you get? You get a big mediocre bank. And I explained, no, that's not right. They actually cherry-picked the best from both sides, and they ended up with an absolute powerhouse. And that's the way it's playing out. It's been a great holding. It's a great tradition that I was a part of. For the last 25 years, I've been managing money, and this is one of the things that I look at, the kind of strength of some of these institutions. And they get plenty of bad headlines. Citi just had to pay a significant amount of money, over $100 million as a fine. But these companies are cheap, and they're critical to the economy. And they will continue to do very well. When rates come down a little bit, you're going to see them mint money. They're doing very well now, and they're going to mint even more. So these are all really, really attractive investments.
Quickly, Paul, your observation on the Chemical Bank roll-up that became Fortress Diamond.
It was great. I mean, Chase Manhattan Bank and merged with the Chemical, which is, as Chuck mentioned, also included Manny. So at that point in time, very early 90s, dominant bank.
Did you take 2-hour lunches at 270 Park Avenue?
No, but if you got up and left your desk, you had to have your sport coat on, your jacket on.
Yeah, I remember that. Yes.
I once got caught in the elevator without my jacket on. The last time I did that, as a very young banker.
Can you believe that? Now everybody's wearing a Patagonian vest. They look like morons.
Yep. Yep.
So
So it was
like Sassour. They look like Sassour.
Exactly.
I mean,
And now Paul is the fashion police here at Bloomberg.
Yeah. So
Thank you,
no,
Paul.
Exactly.
Chuck Lieberman, honored to have you on today to talk about Chemical Bank and where we're going in this great bull market. We'll get him back on here. You know, when we're going to hit this SPX 6000. Red on the screen right now, actually. A little bit flighty here. SPX flat for the morning. Dow, negative 78 points. With our news in New York City, he had an account at Chemical Bank, Michael Barr.
Thank you very much, Tom. Paul, John. President Joe Biden faces a key day of his presidency as he prepares for a high-stakes solo press conference later today to wrap up the NATO summit in Washington. Biden and top allies are seeking to stem the flow of congressional Democrats calling for him to step aside as the party's nominee. Top Biden aides are heading to Capitol Hill to meet with Senate Democrats today in an attempt to prevent further calls for the president to bow out of the race. The House is considering a contempt resolution for Attorney General Merrick Garland, brought by Republican Congresswoman Anna Paulina Luna, Florida. This specific resolution forces the House to vote on the measure. Luna says if passed, the resolution would fine Garland $10,000 per day until he complies with handing over audio tapes that special counsel Robert Hur recorded of his interview with President Biden during the classified documents investigation.
With Attorney General Garland and the Department of Justice refusing to follow the law, we have been left with no choice but to rely on inherent contempt, our constitutional authority to hold an individual accountable for refusing to comply with congressional demands.
Meanwhile, Democratic Congressman Jim McGovern did not hold back when addressing the floor about the resolution.
This is a stupid resolution. Republican leadership knows this is a stupid resolution. Their own members know this is a stupid resolution, but they're beholden to the craziest MAGA members in their conference.
Congressman McGovern says Republicans want to get the recordings because they think the RNC can use them in attack ads. Jurors in New Mexico will continue to hear testimony today in the involuntary manslaughter trial of actor Alec Baldwin. The trial coming more than 2 years after the fatal shooting on the set of Rust. In opening statements yesterday, prosecutors disputed Baldwin's claim that he did not pull the trigger on the gun that killed cinematographer Helena Hutchins in October of 2021. Defense lawyers say the shooting was a tragic accident. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Tom, Paul, John.
Thanks so much. I got to hit the blue button. The Detroit Lions blue button. This came up the other day. I'm pulling this out of the hat. Okay, spring training. It's all fun and games in Florida and Arizona. Yeah. But when the NFL gets ready for a fourth week of August game, are they out in this heat?
Yeah, they're going to be playing in this. And keep in mind now, we have narrowed the number of exhibition games. So, yeah, and now each exhibition game is more telling than what it used to be in the past.
But we have, most of these stadiums are domed now, aren't they?
They got to almost move to a dome just to
for
get
the weather.
I would think it's dangerous.
Yeah, but if you're playing in Chicago, you're not in the dome.
No.
And it's not like playing at Ford Field where you're in the dome.
Exactly.
There are a lot of places out there in Florida. Yeah. There are a lot
brutal.
It's going to be tough.
People fighting for their lives to make a team, and the heat index is 95 or 100.
Back in the day, running two-a-days and outside, and no water breaks, and
no water breaks.
A lot different
I remember
back in the day.
That's cruel.
Yeah.
Now
they don't hit.
They don't hit.
It takes you the third or fourth game before they get ready. Football coming up.
Do the Jets even have fall training, or do they just start with the first game?
We've got a quarterback coming back.
We will see. We've got to get Mohamed El-Arian in here to give us a Jets update. That's what we need. Red and green on the screen now. Well, it's a sprightly market, but red and green on the screen. From New York City, this is Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom, with this Bloomberg Business Flash. The core consumer price index climbing 0.1%. That's actually the smallest advance that we've seen since August of 2021. The year-over-year measure, 3.3% rise there. Also the slowest in more than 3 years. That's the inflation data this morning. Earnings season also underway, with signs of disinflation. Treasury yields, they are plunging. 2-year yield just about 11 basis points lower, 451. The 10-year is down about 10 basis points. That is at 418. Now, stock investors still trying to digest it, mulling it over. A little movement in the risk assets. And Delta Airlines among the individual shares on the move, sliding the carrier's third quarter adjusted earnings per share forecast of missing estimates. Consumers cutting back on snacks. Apparently, PepsiCo reporting weaker than expected revenue growth. The snack food business was hurt by increasingly budget-focused shoppers. I'm surprised they didn't blame Wegovy. S&P 500 right now up 2 points, 3 points we'll call it 5637. That's a record. The NASDAQ Composite Index of 5 points at 18,653. That's a record. The Dow Jones Industrial Average 36 points lower. And we check the markets for you all day long. Right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Paul and Tom.
Thanks so much. Right now, this is an important conversation. It's on all the rage, ETFs. Yep. There's like, it's like Howard Johnson says, there's 28 flavors or whatever. It's like Baskin-Robbins ice cream. And of course, I called up Jennifer Grancio at TCW and I said, the artificial intelligence ETF.
I'm sure.
Up 50%, 12 months trailing. Where do you come? I mean, how many ETFs does TCW birth in a month, Jennifer?
Sure. Yeah, as TCW, we weren't even in this business a year ago. Now we have 6 ETFs, and we will indeed have more, maybe 2 to 5 more coming over the next 6 months. And the way we think about it is we have been an active manager for 50 years, and sort of A+ in equities, A+ in fixed income, now A+ in ETFs. And so we're actually trying to be very about giving you enough so that you can put a portfolio together without giving you too many.
So if I'm in funds, and John Bogle over at Vanguard taught me that I should buy index funds because active managers is sport, and I get it, TCW is doing active management. Can you get better active management returns in an ETF versus a traditional open-end investment company like a mutual fund?
Well, the way I think about it is, a lot of people have used ETFs for index, and the index is the index. And now what we're seeing is we're actually seeing an opportunity to make money from an active perspective. And we could talk a little bit more about that. But with rates as high as they are, and they'll be at least somewhat high for a long time to come, if you can pick who wins and who loses, you really can deliver alpha. And so the ETF is just a wrapper that helps you with tax. So I think we're seeing 2 trends come together. One, just an opportunity to add alpha and add active on the portfolio. If you've got an index, that's great, but take 20% of it, put it over into active, invest in some of these mega trends. And then everybody is demanding the ETF wrapper because it's got some great liquidity and tax efficiency benefits.
Where are you seeing the fund flows right now, Jennifer? Where are you guys thinking about the growth of your ETF business?
Yeah, so for our business on the equity side, we've launched a range, including artificial intelligence, including products that let you invest in energy and power and supply chain reshoring. We've launched a range of products that are really about megatrend thematic investing, not in and out trends, but megatrends. We're seeing trillions of dollars go into artificial intelligence and then these big power and manufacturing changes. So TCW is a leader in these active thematic megatrend products that sit really nicely alongside an index product and help you make sure you're not missing these big trends. And we're starting now a fixed income lineup where on the fixed income side, we've been a terrific portfolio manager for years. And so in that case, we're sometimes converting a fund into an ETF.
I mean, you came out of Stanford. Did you take economics with John Taylor when you were a freshman?
I did. Those big classes, those gigantic
Did he really dress as a raisin? Did Professor Taylor come in one day dressed as a raisin?
He used to do that all the time, every term.
Could you imagine that? The John T. He's one of my great first supporters here at Bloomberg. And John Taylor wassels into 1,200 people. And everybody thinks they're the smartest person in the class, including Jennifer Grancio. And he's dressed as a raisin to pound some humility into him. Jennifer, you were at iShares for years. What has TCW learned in their rollout from the lessons of iShares, Morgan Stanley, and the rest?
Yeah, I mean, I think, as you say, I've been in the ETF industry for over 30 years, sort of since the beginning, where we did the work to build an ETF industry and, what is this crazy wrapper and what can it do for you as an investor? And I think when we look as a business at how we serve clients today, the ETF wrapper has really arrived. It hadn't arrived, it was new, it was an innovation 30 years ago. And so if you look at the wrapper works just as well for an active strategy where you can see what's in the portfolio, you can look at holdings, we can help you manage tax. And so I think one thing is the market really has arrived, and you've seen it in flows. If you look at active, equity and fixed income flows, they really have shifted to the ETF wrapper. That's one. And thing two is you have to know as an investor what you're really good at. And in this day and age, PCW ETFs, they have to be additive. They have to do something different than the tools you already have.
Right. Jennifer, thank you so much. Jennifer Grancio, TCW, there's a lot of alphabets,
yes.
TCW on ETFs. Thank you so much. We got to wrap it up here because it's a Thursday. We got to get to Friday. And I'm sort of like waiting for the 2 p.m. lift in the market.
Yep.
And then what we haven't talked about for the last 2 hours is all the politics in Washington. And balance of power we'll have this, Joe Matthew and Kayleigh Lyons and all that. David Gurr with a great brief earlier. But am I off? John Tucker, help me out here. Am I off the mark that today's one of the most important days in recent American history? Am I exaggerating?
Well,
NATO summit, press conference.
Exactly. We have a 6:30 press conference.
5:30.
I think it's at the 5 o'clock hour, David.
They moved it to
6:30. We're being told.
Yeah. I think because of that, Sweeney has to come in tomorrow. We need him tomorrow to be here. 6:30 press conference.
Yeah, 6:30 press conference, and so that'll be telling. He's got some more
events. Too late for somebody?
Yes.
No, John.
I'm kidding. I'm sorry.
But I'm sorry, it's like whatever your politics is.
This weekend feels, Tom, it just feels like this weekend something will happen one way or the other. And I don't know, I have no idea which way it'll go, but it just feels like, the weekend we'll get the press conference today, maybe some more lawmakers will weigh in on one side or the other. But again, the question I ask some of these political folks is, really, what is the drop date for making a decision for the party?
I get different answers.
So do I. Is it the convention? Is it before the convention? Is it now? I don't know.
In honor of the late, great Ken Pruitt, I'm looking for the second day in a row at the CAC 40.
Wow, look at you.
Off the bottom in the crater here, back to the middle of June, with the French elections, the French index, their Dow Jones, industrial average, 2 days in a row off the bottom. And the basic theme is, and Lionel Laurent nailed this, the left's in disarray, and Macron is beginning quiet discussions to get a wider center.
Okay, that would be helpful.
That's about what'd you learn today? What was the number one thing you learned today besides you're taking the ferry?
Well, yeah, exactly. Well, I've got inflation that is, moderating. I think probably right in line with what the Fed would like to see. I think if you ask the Fed that this rate of moderation is probably right in line with their playbook, and that opens up September for potentially a rate cut. And as Ira Jersey pointed out, we got a lot more stuff between now and September in terms of economic data. But as of today, you would think that the Fed could be a little bit more cautious.
I was thunderstruck by Michael Nathanson's comments on the Olympics.
Exactly.
I just was unprepared for that. He's really cautious about it.
And NBC is I'm not going to say locked in, but they are committed to the Olympics for years.
I'm depressed.
So,
44 years ago, I can't explain to people younger the impact of this gentleman from Detroit. Michael Barr called me up. He goes, play Seeger. So we're playing Bob Seeger.
Tour. It was great.
He's done like 3 farewell tours. It's like Michael Barr. Good morning, everyone.